JMC financial courses, technical analysis, fundamental analysis, derivative courses, foreign exchange courses, and above all, most popular WD GAN advanced course. We are not going to stop here. They are the courses, finance courses for non-finance community. So welcome to JMC financial courses. Thank you for overwhelming response to the first course, Stock Trading with Price Action. That course is now for more than 4.5 hours, and this has been possible just because of the support of all the students. Not only the support, but the blessings and the contribution what they have done into that course that has made it the unique. Now I am glad to introduce stock trading with GAN time cycles and trend lines. What's the GAN time cycles? GAN suggested many time cycles, hundreds or even more time cycles. But trading with hundreds of cycles is neither practical nor advisable. Why so many cycles? There are thousands of stocks, so are the many related cycles. There are different phases of the market, so are the different cycles. So what's the solution? Let's find out one or two universal cycles in this course and try it out how these work. GAN time cycles, this may be new concept for many traders, and several would have attempted and but have not been able to make it tradable. In this course, you will learn how to take advantage of time cycles for trading. In simple words, you will learn how to trade on GAN time cycles. Why trend lines? Trend lines are the bridges between the time and the price. Time and price meet on the trend lines. Trend lines work as a good support and resistance. Trend lines suggest the reversals. Trend lines are the best tool of price action. Multiple trend lines complement each other and provide multiple support and resistance. What are the sections of the course? First section is GAN time cycle. Second section is trend line, where trend lines, formation of channels, multiple trend lines and channels, pitchfork, and the regression channels are the part of it. Third and the last section, combining the two, time and the price. So, welcome to this course, Stock Trading with Time and Price, GAN time cycles and trend lines. With this, wish you happy trading and happy investing to all my students. Hello students, welcome to the introduction section of new course GAN time cycles. There are the three ways to trade in stocks. First is on price behavior or on price action, as I selected one concept of Aurora candle in my last course. Second is on time, different time cycle, which we will try to apply in this course, and on time and price. In this course, we'll try to build a foundation of time trading with price. One warning, Never get overexcited by time cycles. First learn and absorb the concept, then you can apply in your trading. What we are going to understand is the time. Time illustrates possibilities. When there is possibility of reversal on a particular day, it may not happen. It's an opportunity only. If it triggers on that particular time, avail it. It's yours. If there is a no trigger, don't get biased. If there is a no trigger, don't get biased. Time is only an alert. How it is an alert? Suppose there is a warning of thunderstorms. Save yourself. Take a shelter in safe place. But tomorrow, direction of storm may be changed or speed can be slowed down. It may not be harmful. But if warning is right, imagine what kind of opportunity you get. You save yourself. You save the damages. And in stock market, it's not only about saving yourself, but making good amount of money also. So what I am going to just repeat is time is only an alert. Warning of thunderstorm, save yourself, but tomorrow direction of the storm may be changed or the speed can be slowed down. But if warning is right, imagine what is an opportunity and what all the opportunities you will get by playing on time theories or time cycles. Time is an alert. What all can happen on the day of alert, or the hour of the alert, or the month of the alert, or the year of the alert? Reversal for short-term breakouts. There can be the reversal for short-term, or there can be a breakout. Market may be in a sideways trend, there may be a breakout, or market is moving in one direction, can change the direction. Or the possibility is that on that particular day, there can be a creation of trend deciding range. If the price will move above that, buy it. If the price will move below that, sell with the stop loss. Vibration. What else can happen? Vibration for that at least particular day or few days. So when I am telling you what kind of possibilities are, it means if you are alert on that day, you will be able to convert those possibilities into opportunities. Now, my suggestions: don't get overexcited after 2-3 successful events. When you will learn the cycle, you will get excited. Oh, this was being forecasted, it has happened. Again, it is being forecasted, again, it has happened. Don't get overexcited. There is a possibility it may not happen. It is only an alert. And when there is an alert, you have to be alert. You have to be in present to find out the opportunity. All right? Same way, you don't get discouraged about 2-3 non-events. There was a possibility, but nothing happened on that particular day. Don't get discouraged. Next event may be a very good possibility. I will take many case studies. 1, 2, 3, 4, 5 on commodities, on equity, on index, on stocks, on currency. I will try to do many case studies. After learning, you will also try it. And then you will be also able to find out the possibilities which can be converted into opportunities. After all, the time is only an alert. It's my responsibility. It's my responsibility to tell you the truth. It's my responsibility to give you the guidance up to that level. If there is a failure, how to deal it. If there is a successful stock, every ball is not where you can hit a sixer. Every ball is not a ball where you can hit a sixer. There are the few balls where you will strike sixer. Some balls you will strike, you will leave that ball. All right. So, after all, time is an alert. Time without the price. Time without price, age, speed, or reference is meaningless. Time is relative. Depending on another variables, or many times it's not. I'm saying two things. It will be explained in next few slides. In different situations or events, time can behave differently. According to Einstein, Albert Einstein, special theory of relativity, it is impossible to say in an absolute sense that two distinct events occur at the same time if those events are separated in space. And in your stocks, price or the chart is being formed in the space only. There are the three dimensions. One is the price, another one is the time, and third one is the space. And the charts are being, or the price moves in space only, within the boundaries of price and time. Why timing the events are difficult? Why the timing is again and again criticized? They are the two kinds of vibration. Understand that. They are the two kinds of vibrations, internal and external. Internal vibrations are mostly static, repeat again and again on same interval or create the same patterns like pendulum of a clock. And they are the external vibrations which are based on other variables, on other events, on other happenings. So it's dynamic. Hence, every time it's a new pattern. Means there are the two main vibrations. One is free harmonic vibration, which I say the internal vibration, and the another one is the forced vibration, which I say is the external vibrations. This is an example of free or internal or harmonic vibration. In simple words, static vibrations. This is 1 year chart of one stock, and you can find out after every same interval. There are about 9 intervals in 1 year. After every same interval, you will be surprised to see in this chart that there is a reversal, top, bottom, top, bottom, top, bottom, top, bottom, top, or top, top. On every same interval, there is a change in the pattern, or either there is a breakout. So this is one example of free or the harmonic vibration. What the Albert Einstein said, everything is vibration, and the source of the vibration is energy, some power. Higher the energy, bigger is the swing of the price. Vibration lasts till the time energy. Vibration lasts till the time energy is not completely exhausted. Let's work on few stock market examples to understand the time in next lessons. I am starting course with time duration of 1.5 hours. The same I did in my last course. Stock trading with price action. That That's my first course on Udemy, and I presented it with the time duration of 1.5 hour. But after the overwhelming response in just 3 months, total students enrolled number is now 720. And I tell you, from 1.5 hour to 4.5 hours. Now this course is for 4.5 hours. How it has become possible? Just because of your love and the sport. Because of your overwhelming sport, your overwhelming love. That really motivated me to do more and more research on the subject Aurora candle, and at last I could reach to final 2 lessons or 2 lectures. One is on Aurora candle simplified Aurora candle, and the second one is dynamic Aurora candles. Those 2 lessons really completed that course. And I am not have any hesitation to tell to that this has just been possible because of your sport, your questions, your answers that made it possible. And I hope if same will be repeated in this course, the possibility is to extend this course for another 2 hours. At least from 1.5 hour we can reach to 3.5 or 4 hours. All right, with this I'm going to wind up this introductory lecture. I just talked about the time, and in next lesson, which will be very simple, I will going to explain each and every term, how to deal with the time, and then how to get best out of that those studies. All right, with this I wind up. Good luck, goodbye, happy investing and happy trading to all my students. Hello students, this is the chart of Nifty 50, and the low was being formed on 24th of March. Okay, 24th of March I have taken this date. And we are going to work on the concept of 144 days. 144 days. All right, now I am going to add from the bottom date, that is 24th of March 20, and then by adding 144 days, the result is August 15, 2020. August 15, 2020. All right, let's see what that date is. And this is the date. This is 14th of August. 15th is the Saturday, being the holiday. So 14th is the day. This is the day which is a highlighted this candle just on the 144th day. The price made a new high and then corrected by almost 250 points or so before 250 points before it recovered near to the closing of the day. That is the 144 day. This is the bottom date which I selected, that is the 24th of the March. This is the 24th of the March, from where this is the day from where I added 144 days, and then what was the result? That was the 15th of August 20, and this year and the price made a new high, and on that day there was at least, I'm not saying it is going to be the reversal by all the means, but yes, the price vibrated on that particular day. Now let's take an example of gold, which is being listed at MCX in India. This is the bottom. This is the bottom after a good correction from about 45,000 to almost at 38,000 or so. This is the candle which made a low. The day is 16th of March this year. 16th of March. Now I'm going to add 144 days to this. Let's do it. Now we are working on the chart of gold. The bottom was March 16, 20. I am going to add 144 days to it. Then the outcome is 7th of August 20. 7th of August. That was the bottom. From bottom I have added first in Nifty 50 and then I added to, and then there was a big correction on that day on 14th of the August. At least it vibrated. It vibrated, made a top and corrected about some points. Let's see, there was a big correction in gold or not, or at least it vibrated. It may not be making a lifetime high. It may be making a very short-term high, right? So let's see what the concept is. Either it will vibrate or it will make a correction. If it is moving up, will correct down, and it's moving down, then it will move up. All right, let's check the 7th of August in gold. Okay, this is 7th. This is the 7th of August. This is the 7th of August. Gold formed a new high, and after that corrected from almost 56,500 or 600 to almost 50,000, or even lower than the 50,000, somewhere near 49,800 or 600. It made a low, 48,811, and then bounced back again the very next day after that, taking correction of for 4 days. All right, so that was another chart which vibrated on 144th day. I am talking about 144 calendar days. I am not talking about the trading days. Time, stock market may take a pause, but time is not. Time is going to keep running. Hello students. Let's begin with first cycle. First Gann cycle is of 144 days. It can be 144 hours, it can be 144 minutes, it can be 144 weeks, it can be 144 months, it can be 144 years also. But I'm starting with 144 days and 144 calendar days. I'm not talking about the trading days. I'm talking about 144 calendar days. Why 144? Why 144? It's a square of 12. Is that the only reason? Let's find out. Power of 144. 12 months, division of full 1 year time in 12 parts, cover all the seasons. Be it is summer, winter, rainy season, spring, etc. This is such a polygon. Now about the geometry. This is such a polygon which is nearest to a circle. If you look at the diagrams which are being presented, it is nearest to the circle. All that straight lines are being formed on the circle itself. In one dodecagon or 12gon has 12 triangles with 30-degree angle in center and 275-degree angles at outer circle. All right, when in circle, if I take a count 30 into 12, that comes to 360 degree. But when we take 150 into 6 either or 75 degree into 12, that comes to 1800 degrees at a outer circle. But is this the reason? Is this the reason? Right reason why that square of 12 is being selected. It is a perfect square on a perfect square Fibonacci number. What are the Fibonacci numbers? Let's do a small exercise, then we will be able to understand that. Let's understand how to get Fibonacci numbers. Even in schools, I think in 3rd standard or 4th standard, in the mathematics class, teachers are teaching this subject Fibonacci number. How to get this number? Just write any two numbers. I have written 0 and 1. Just add these last two numbers. 0 plus 1 is equal to 1. Then 1 plus 1. Last two numbers. Then you have to add 1 plus 1. You will get the next number. That is the 2. Then 2 plus 1 is equal to what? 3. 3 plus 2 is equal to what? 5. Alright. So you can extend it. 5 plus 3 is what? 8. And so on. You can continue. It's a spiral, then it can go to any extent. All right, so you can reach to any number. All right, let's come back now. Find out why we selected 144. Is 144 here in this series? Yes, here it is. 144 is there. Now if the 144 is there are the many other numbers. Why we have selected only the 144? That is the one big reason. It is a perfect square. It's a perfect square of a number, that is a 12. 12 12s is what? 144. Let's find out there is any other number which is a perfect square. Square root of 0 is what? Square root of 0 is 0, 1 is 1, 1 is 1, 2 is not a perfect square, 3 is not a perfect square, 5 is not a perfect square. And if you find out hardly you will find any number which is a perfect square. There may be very close, but perfect square is 144. This is the reason why 144 is being selected. Another reason for 144 which we have selected is it starts with 1. It starts with 1 and with what? 1. If I take a total of this number, 1 plus 1 plus 4 plus 4 is what? Number 9. It starts with the beginning and ends at an end. It indicates a cycle, completion of a cycle. So 144 is a perfect number for a complete cycle. So we have selected 144. 144 can be the minutes, can be the days, can be the weeks, can be the months, can be the years. But we will start our study with 144 days. All right. So this is our start. Another number which is important is 127. How we have got this? Now, if you find, if I divide M1 with the previous number, 144 with the previous number 89, what is the result? 1.618. Another number is what? 233 divided by 144. That is 1.618. 377 divided by 230. If I divide any number with the previous number after 8 or 10 numbers of series, then we will get only one result, that is 1.618. 1.618. If 987 divided by the previous number 610, it means that if I will multiply 610 with 1.6180, I will get 987, next number. It means that this series is expanding in a ratio of 1.618. So 1.68 is an important ratio of this series. I will talk about other series numbers also, but for extension 1.61 is the important number. By multiplying the current number, we will get the next number. So now if we find out the square root of 1.618, this number, that is 1.27. So 127 is also a important number. 127 is a important number. All right. So how we got 127 and 144? Now that you can understand that how these numbers are being selected. We will work on some other numbers also, but let's start with these two numbers, 144 and 127, and let's set how the results are going to get us the optimum results or the failure. Let's see, find out. With this, I wind up this session and I will start new session with all case studies. Good luck, goodbye, happy investing and happy trading to all my students. Hello students, I visited the chart of Bank Nifty and just looked at the date of top was being formed on 30th of December 2019. This is the top date. And the bottom was being formed on 24th of March 20. All right. So what I did, I entered the date of December 30th, 2019. I got 144 day, I got May 22nd. And May 22nd was the another bottom. May 22nd was the double bottom or little higher bottom, and from there the price rallied. From there, that was the bottom. That bottom was not being tested and breaching, so it is another thing. Not even it was being tested, and here on 22nd of May, the bottom was being formed, and from there a rally started. Even I posted well in advance that there can be possible bottom on 23rd of May, and on 22nd of May there was a bottom, and from there the market started upward rally. Now let's calculate 144 day from 24th of March. 24th of March, March 24, 2020. And 144 day is 15th of August. 15th of August. 15th is the holiday. Say I can take 14 or the 17. Again, there was a bottom, and that bottom is neither breached and nor it is being tested, and from there market moved up by almost from 22,000 to 25,000. 3,000 points upward movement from there, and from this bottom was near to 17,000 and it has reached to 25,008, 50% rally from this bottom. So once I tested on this Bank Nifty top and the bottom, from there onwards on 144 day from the top there was a second bottom, higher bottom, and on from the bottom if I calculated 144 day there was another higher bottom, and from there the market rallied. From here also for about 1 2 3 4 5 6 7 8 days the market was moving up in a big way, and from here also in 10 days market rallied in a big way. So this was a trigger point, a reversal. Market was falling. From there the market moved up, and here the market was sideways, not either the moving up or the down. It was in a consolidation period for almost many months, from June 12 to 12th August, 3 months it was in a consolidation period, and from there the market triggered. Some vibration is really a trigger on 144 day, but I am not saying don't get biased. It's not it is going to happen every time on every chart on every time frame, but even 10% out of the lot, if it triggers, that is an opportunity to participate in a big move. All right, so this is a current scenario of Bank Nifty where I could manage to see from the top and the bottom both has given a very good reversal or the trigger. Here was the reversal and here was the trigger. The market was in a consolidation period, and from there market, this is another example of 144th day, how this is an important. You looked at gold, you looked at another silver, and there was a one or two more chart I have considered, Nasdaq also, where the market was in a consolidation period, and from there it triggered and market rallied from there. All right, with this, okay, let's see one more case study if we can club together with this lecture. After Bank Nifty, let's test the same principle of 144 days on HDFC Bank. Let's mark 3 tops. This was the first top, this is the second top. Second top is on 19th of December, and the third top, which was being formed, the last top, that was on Jan 20th, 2020. And thereafter, we can see one bottom. That one bottom, let's take one bottom, that of 24th of March 2020, and find out what it happens on 144 day from these particular tops and the bottoms. Let's find out that 23rd of September, 19th of December. Let's put this in bottom date and calculate the 144 day. That is Feb 14. Let's find out first Feb 14. Feb 14th is, this is the day of Feb 14th. Now let's learn how to trade on it. First, change the color, which are the outcome that are marked with the red vertical line, or which we marked with the blue. Those are the historical top and the bottoms. 3 tops and the 1 bottom we have selected, and this is the first outcome of the top, that is 14th of Feb. Let's mark the top and the bottom of this day. I'm just telling you how possible trade you can find out of this 144 day. Once the price breach below the bottom of that particular day, sell. Whenever the price moves above that particular day, buy. Price breached below, and without any stop loss, it tanked. It fallen drastically. That was the historical fall of decades, right? So I have marked top and the bottoms. From there the market moved down drastically. So even without the stop loss. What would be the stop loss? That was the top of the day. Next outcome is May 11th. Now let's find out the May 11th. May 11th is 5th, 7th, 8th. This is 11th. This is 11th of May. Okay, market tanked from the top, and then it was almost sideways for some times. Let's mark the top and bottom of this particular day. Top of this 11th of May is being marked. Now let's mark the bottom of this day. Oh, great. Market tanked on first day, pullback, then again retested. There was for some points, it moved above that top, and after that, then it tanked almost 10%. Once again, then moved up equal to the same distance, which is covered below the bottom. Again, above the bottom, it has gone above that. Once again, retested that zone, and without the stop loss, this time moved up in a big way. All right, here once it moved down, then there are almost 10% from 912 to 812, 818. And then once it's moved above 953, it moved to almost 1066 or so. So both ways it has given us an opportunity. Okay. Now this was, for this time, then it moved within this range and moved up. What is the next date? Let's find out. This is June 12th. June 12th. June 12th. Let's mark it with vertical line. Oh, this is the big large candle. This is 12th of June. It vibrated on that day, and even the reversal took place on that particular day. I'm saying even once out of 10 we get this kind of chance. This is going to take care of n number of stop losses. But most of the times we are finding either it is a trend decider or a reversal or vibrating point. Here it is a trend decider also. Here it is a vibrating day also. Then from the reversal day also. All the three things happened on this June 12th. Very well. It played very well. And then one thing more, that from this bottom it moved. Once it moved up, then it moved in a big way. And then the bottom of previous, it was not being breached. Next date with us is 15th of August. Okay, that is the holiday. So we can take the 17th of August. 17th of August is again reversal. 17th of August is again reversal. The bottom was being created on this particular day. And from there, the market moved up from like 1040 to 1120. Let's take the top and bottom of this. Price moved out of this range very next day, and within few days, it moved by almost 80 points or even more than that. 100 points within a few days. Again 10% movement from this point. We have we earlier selected 3 tops and the 1 bottoms. All have proved to be a good opportunity. This was the wonderful. It was the particular day, vibrating day. It was the reversal day. It was again tested the same zone which was being created earlier vibrating point, and from there it moved up in a big way. We can take the top and bottom of, we can take the top of this. From there, once the breakout took place, even then it moved up almost by 60-70 points in a very short period. All right, so this we have tested on Bank Nifty. Now we have tested on HDFC Bank. It has also given us a very good opportunity. And then the zones which we have created which we have created out of these particular days high low, those also have proved to be a very good top and bottoms. This is the first reversal point from where the market tanked in a big way. The second opportunity, this was a really big move. So this was the first decision, and the second decision what we took, this is a zone. Whenever price will come in future to this zone, that also can be a big challenge zone. It can be a big resistance. All right, without the stop loss, we have got this opportunity. Now the second zone which was being created, that if moved up, then it moved down. We may not be able to get a good advantage of it, but at least is moved down in a which pattern, and the same pattern it has moved from down to up and from up to down in a same fashion. But this time it has tested the zone, the same zone, but without the stop loss, have given us a great opportunity to get the benefit out of it. Out of the four, three proved to be a very good opportunity, one of the best opportunities, and opportunity of almost 10% or more, 10% or more. So this way we can have test our 144 day, and we should look for the reversal vibrating or the trend ranging day on this particular day. With this, I wind up this lesson, and lest we will try some more case studies in other next lectures. With this, good luck, goodbye, happy trading and happy investing to all my students. Okay, this is the chart of Axis Bank, one of the topmost private bank of India. The price was in a sideways movement. When I used to take the classes, I used to tell that this is the area. Whenever there will be a breakout from this area, then it will be a very big move, very big move. And it really happened in that way. Now I have selected this area where the multiple top are on the resistance and multiple supports are on the support line, right? On the same support level, and the same when the support level was being breached, and from there the market tanked in a big way. All right, this is a scenario of Axis Bank. Now, can we apply the concept of 144 days on this? Let's mark the bottoms and the top. First bottom had taken on 25th, and then the top was being formed on, there is a holiday in between. I can select 1st of November, and I can take the 1st of November also. 1st of November is the highest close, and 4th of November was the highest top was being formed, and 13th of May is the bottom, clear bottom, and clear top is on 25th. It is 26th of November, and then I am going to take all the tops and bottom. Although the market was sideways, but I am going to pick all the tops and bottom and want to see, will I get some vibrating point or the trend deciding range or the reversal point by using these multiple tops and bottom when the market was sideways. All right, then I had taken 27th of December 2019 where the highest close was, and then there was a highest top was being formed on 31st of December, and the bottom is on 8th of Jan 2020. And then it is 14th of Jan 20, and then bottom is being formed on 22nd of Jan 20. Oh, so many levels. Let's see, find out 27th of Jan 20, and then next bottom is I have to select one out of the two. It is first or the third. Third is of course the bottom, 3rd of Jan. It can be the first or the third. Third is the first was the lowest close. Then the top is, oh, from there, this is the last top from where the market tanked. And this date is 12th of Feb 2020. Okay, let's try to do what it happens. First date I have is 25th of October. Let's start with this. First of November, 4th of November, and then 30th of November. Let's pick up first 3-4 dates. First is 25th of October, then 1st and the 4th of November, first of November, then 4th of November, and then it is 13th of November, November 13th, 2019. Now, first date I got is 17th of March, then 4th of March, and 27th of March. Okay, let's see. March 17. Okay, this is the March 17 first date I have got. This is after the breakout from the range. This is the first date I have got, that is from where I will mark top and bottom on that particular day. Top is being marked and the bottom is being marked. And this proved to be a very good resistance. Price moved below this and tanked, and when attempted again, and from there also the correction emerged. This is the date. First date is 17th of March, from where the market moved down without the stop loss above. If I am selling below this low of the day, oh my God, even in July, even in September, this range is not being breached. Price just tested few days back the top of this. Otherwise, the bottom of this day has proved to be a very good resistance. And only in the September, after almost 6 months, the price attempted the top, and from there again it has nosedived. Oh my God, what a trend deciding range of that particular day has proved to be. Now second day is 24th of March, where the lowest low was being formed. Second day is 24th of March, and the another day is 27th of the March. 24th of the March, 27th of the March. Let's take and the top of the bottom. I need not to take the top. We can take the top of bottom of 24th also, because 24th and 25th has proved to be a trend reversal day. From there the market, that was the lowest close. Market marched little bit below, inched down below the low of the 24th on 25th, but closing was much higher. And then 27th, and the next date is marked on 3rd of March. 3rd of March again is a reversal. That was a bottom. From there the market has taken a good up move. Good up move from there, from the 3rd of March. All right, I have taken first 4 days till 13th of November. Now next date is 26th of November and 11th of December. Let's fix those dates also and get the 144 day from there, November 26th, and then the next is 11th of December, December 11th, 2019, and then what is the next date? It is 27th of December and 27th of December and 31st of December. December 27th and December 31st. All right, I got the date April 18. First date is April 18. First date is April 18. April 18. April 18 is the holiday. 7th is the top. 17th and 20th is the top. Again, both dates is the top. Double top is being formed. And next date is 3rd of May. Very fine reversal. My God, from both, all the 3-4 dates has proved to be the fantastic date. From here again, from 30th of April, 3rd May, it was the holiday. From there again the top is being formed, and from there market, 3rd of May is the holiday, and from there the market tanked. The next date is 19th of May. Next date is 19th of May. And next date is 23rd of May. 23rd is the holiday, but 22nd May is the bottom. 22nd day is the again bottom. Price was sideways. Even on 19th of May, price was sideways. We will take the top and bottom of that day and we'll try to prove it. And but on 22nd of May, it was a bottom, clear bottom, and then from there the market moved up. Let's take the next dates. It is 8th of January, 14th of January. 8th of January, 14th of January, and the next two dates are 22nd of January and 22nd and 27th of January. 22nd of January and 27th of January. I've taken 28th, 27th of January. Now I got first date is 31st of May and then 6th of June. 31st is the holiday, and 29th of May is again a trend decider or a reversal point. Market tanked little bit, and from there the market moved up in one direction. We can take the top and bottom of this because it is like a dozy. It didn't vibrated on that day. It was just a dozy and proved to be a very well trend decider. From there the market moved up without the stop loss, has given a good point. Next date with us is 6th of June. 6th of June is again holiday, and 5th of June again proved to be a reversal point. 8th of June. Okay, we can take 8th of June or 5th of June. 5th of June has proved also a reversal date, and 8th also has proved a reversal date. Both has been proved to be a reversal point. From there the market moved up. On every point market is making top, bottom, and from here the next date is 12th of June. From there the market was moving down, it corrected back, and then market again tanked from that day. Let's mark the top and the bottom. Next date is 19th of June. Next date is 19th of June. Let's mark the top and bottom on 19th of June. It is neither a bottom nor a top. But now look at it, look at it. The bottom and top formed by this particular day has proved to be a very wonderful sport. Do I able to make the point? Do I able to make the point that this point is either a vibrating point, big movement we can see on this particular day, or in this proved to be a trend deciding day, or it is a reversal day for the top and the bottom has proved as a very good sport. And earlier we have the resistance. The market moved perfectly within this range for months from 6th of June to some big first week of September. Almost June, July, August, almost 3 months. 3 months was within this tight range of 421 to 451. 421 to 455, 51, 55. Market was moving. These are the Gann levels also. This is a one cycle of Gann level also. But as per this presentation, I think 144 has something in it. If we are using this as a big vibrating point, it can be a trend deciding range. It can be what next? It can be a total complete reversal. All right, let's test what happened on 127 day and 144 day. Either one out of the two will work, or the both will work, or the possibilities both may not work. But let's test on different time intervals and different time frames. This is the chart of Nifty. Let's find out the bottom. This is the bottom. 26th October 2018. 26th October 2018. 127 day is March 2nd, and 144 day is March 19. March 2nd and 19. March 2nd and 19. March 2nd. Okay, there is a holiday. Let's select 1st of March, and then next date is 19th of March. 19th of March. Wonderful. From there, the market was sideways for many days. Market was sideways for many days, and from here the bull market triggered, and then within these few days, almost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 or 11 trading days, market moved up by from the level of 10,800 to 11,500, almost 700 points in 10 trading days. So 127 is, if I say, the trigger point, right? It is a trigger point. Here, how you can play that 127 day, this is the 127 day, take a top and the bottom of this, make a top line on it and the bottom line on it. And this is your trend decider. All right. Now, from here, if the market moves up, buy. Your stop loss is just below the low of this day. And if it drops below the low, sell. And your stop loss would be the top of this day. So this way you can initiate a trade. And here the stop loss was almost less than 50 points. 10,051 is the top, 10,007 is the low, and then your stop loss was 43 points, and the reward you got, hold your position till that time, or you can use price action also for that. If you find any reversal, you can book your profit in between also. It's not necessary that you will hold your position till 144, but if the market is daily closing, there was a jump, it closed much higher than the previous day, and this also closed higher than the previous day. This closed little higher than the previous close. This was a quite a good number of gain on this day compared to the closing of the previous day. Again, this is although the doji, but closing it much higher, and here also it closed at a very high point, almost at the highest point. So, but there was a gain of 708 points in 10 days. I think it is advisable to book the profit, although the market has gone to this level. We'll talk about what after the 144 day, but first thing first is make a foundation. 127 day and 144th day is really an important. Let's find out what happened in gold. I took the example of gold also. Gold future. Okay, this is the 127 day and this is 144 day. I worked for you. This is the bottom. This bottom is 16th of March. March 16, 2020. 21st of July and 7th of August. 21st of July. This is the candle. And this is the 7th of August. Again, which was being, it may not happen in all the days or in all the chart, but even out of once in 10 times, if it happens, what is the reward? How much we make the money by just guessing or using lot many charts, finding many buy or sell on the oscillators, finding out the diversions, or we are working on complex charts like Ichimoku, or we are trying on say moving averages. But here, if you are finding here again, say this is the 100, this is 127 day. What you will do? Don't get biased. It will be bull or bear. Just make the trend deciding zone. Just plot horizontal line on the top and the bottom of this candle. If the price moves up, buy. If price moves below, sell. What is your stop loss? Almost stop loss is 500 points. But what is the gain? From 49,500 to 56,000. 6,500. 6,500 is the reward. 6,500 is the reward. Just on 127 day and 144 day. The market was quiet for so many. Same pattern which was in 2018. It was the pattern which was being made in the chart of Nifty. Same is being reflected in the gold. Same. There is no new chart. As in the Bible it is being said, there is nothing new. Everything is being repeated again and again. Even in Bhagavad Gita it is being said, what I am going to preach you, that was earlier also being told. And before that also it was being told. I am just repeating that knowledge. Alright, so same you can find in this period. If you are not even trading in these days, that will work. But if you will miss this kind of strike, so this is a risk reward is very nice, very good. Let's find out. There was a same, I think pattern is on silver also. Let's see, it worked on the difference of the days. I don't know, silver reflected on 127 day or not. Let's find out. remove this all previous drawings. Okay, this is the bottom. This is, I think they're all, I think one double bottom or triple bottom are being formed. Let's take this large candle. This date is 16th of March. 16th of March. Oh, it is 16th of March only. Let's look for 21st of July and 7th of August. 21st of July. 21st of July. Great, 21st of July. Market was moving very slow, although it was in upward movement. But here it triggered a bull market. 1, 2, 3, 4, 5, 6. There was there was a like a sideways movement for 4-5 days, but on 144 day, and this should be 7th. Yeah, this is 7th of August. And then what a gain from in these points, from the low of 54,800, say 55,000, to the top of 78,000. 55,000 and 78,000, the gain of almost 24,000 points. From there, the market is somehow it is sideways or corrected a lot from 78,000. It corrected to 60,900, and till yesterday it was trading at 66,000. Okay, this is 127 on 144 day. Both reflected very well. We will try to apply this on hundreds of charts. So then there will be the conviction that it works. It may not work, but if it is working on even 10% charts, it's fantastic. We'll try to, I wind up this lecture, and then in next lecture we will pick up some more case studies. In second scenario, there is a possibility what has happened in first scenario. There was a big trend from 127 day to 144 day. Suppose there is a sideways movement from 127 day to 144 day. Then what will happen? Then on 144 day, there will be a trigger of a trend from 144 day. If there is a no movement from 127 day to 144 day, then on 144 day we will find the big momentum. That may be the starting point of a rally or drop, or that can be the finishing point of rally or drop. Anyhow, let's do few more examples, then we will be able to understand. This is a chart of Shanghai Composite. It formed the bottom of 4th of Feb. Then it was a double bottom. Market moved up and then just reversed back to almost same level. Only one day it closed before this bottom. So I will pick, because it opened with a big gap. Look, it was at 2,980 or so, and then after the second day, it opened at somewhere at 26,083. Big fall. It was a big fall. It was almost down by 10% or so, more than 10%, right, in one single day. So I will pick this date. This is 4th of Feb. This is 4th of Feb. 4th of Feb. And then 127 day is 10th of June, and 144th day is 27th of June. 10th of June. Okay, this is 10th of June. There was a some drop for 2-3 days, and then market recovered again back to this level, and our next day is 27th of June. 24, 27th of June is holiday. So on 29th of June, let's make this. There was some correction. The same method we will apply here. Although there was a sideways movement, market dropped first and picked up. There may be some stop loss. I just make plot a high low on this date first on 127th, and then I will apply the same on the high low of 144 day. Okay, this I have placed for 127 day. Now I will do it for, all right. Okay, oh, the high of 127 day and the low of 144 day is the same. So this is a zone, and on 144 day onwards, it triggers the buy. Here, if you would have sold, you may cover at some points below, or otherwise there will be a stop loss. Again on 144 day, market hit the top of this but didn't trigger the stop loss again. Only one stop loss when it was being sold at the lower point. Here, once the price moves above, there is a big movement. There was a big movement after the 144th day. So if the market is sideways from 127 day to 144 day, then there is a possibility on 144 day market will attempt to take a up or the down momentum, one way movement. Here this movement is from 2978 to, oh God, 34,055. It made a high on that day, and till date this high is not been breached. What we have to do after 144 day, we will talk about it, but till now we'll focus on 127 day and 144 day. If there is a trend on within these two periods, this period of 127 to 144 day, then there is a possibility that there will be a slowdown after that, or market may be sideways, or new trigger may drive from the 144 day. All right, let's do one more example. Find out Bank Nifty, or we'll do Nasdaq. Oh, it made bottom on 22nd of May 2020. It is the real bottom? No, it made a bottom on 24th of March. 24th of March 2020. Our trigger dates are 29th of July and 15th of August. 29th of July, 29th of July, this is 29th of July. Doji was being formed over there, and then 144 day is 15th of August. 15th of August is, this is 14, this is say 17. You can take this date. Let's mark the high and low of this. This is the high and low of 127 day. Market remains sideways within this period, and look what it has happened in just 10 trading days. Oh God, that bottom of this 127 day is the high of 144 day. This is the high and the low. From the market moved up, took support on the top of the 144 day, and from there 1, 2, 3, 4, 5, 6, 7, in 7 trading days, or in total 10 trading days, it jumped from 21,600 to 44,600. 13% gain in 10 trading days. In 10 trading days. So if it was sideways, there was a trend. If there was a trend, then market corrected or just started behaving in a range, started trading in a range. Let's talk about Nasdaq. Nasdaq 100. Okay, Nasdaq 100 made bottom on 23rd of March. Okay, it is the same 23rd of March. No, it was 23rd of March. Now 78th of July and 14th of August. 28th of July. 28th of July. This is 28th of July. Some momentum gathered, market went up. Let's mark the high low of 28th of July first. Not even a single stop loss triggered. Market remained just above the low of this 127 day. From there, the market marched up and then corrected for 2-3 days. Our 144 day is 14th of August. This is 13th. This is 14th of the August. Market was in a bull market, and but there was a not good momentum. But from 144 day, look at the momentum. Market moved from 11,180 to 12,000, almost a gain of 9,000 points. Gain of 9,000 points. All right, so we have just learned how the 127 day and 144 day will behave or react to the price movement. All right, so this is we wind up this lesson, and then we'll take few more case studies. Hello student, this is in reply to a question which was being asked that this 127 and 144 method works very well on HDFC Bank, but it has not worked on Aurobindo Pharma. I am taking the example of Aurobindo Pharma. I have selected first bottom date 14th November 2019. From 2019, what I am going to do is add 127 day and 144 days. Let's take the date November 14th, and now I am going to add, it's November 18, 2020, and then I am going to add 127 days to it. After the addition, it comes, the first date comes the 21st of March, and the second date after adding 144 days, it is just by adding one, it is 7th of April. 7th of April. From 14th of November, I got 21st of March and 7th of April. Let's test this, either these dates have worked or not. First date is 21st of March. 21st of March. 21st of March is the holiday. 23rd of March is real the bottom from where the market reversed. Real reversal date is 127 day. From there onwards, for 144 day is 7th of April. Yes, it is 7th of April. Now let's mark that 7th of April. 7th of April is there. Yes. In this 7th of in this period, from 127 to 144 days, market was sideways. Market rise and then dropped. From 144 day, new new bull move triggered and market shoot out like anything, zoomed from there. So as per the concept, when the market is sideways from 127 to 144 day, there is a not big movement. Then on 144 day, there will be a chance of a big move. Now let's calculate from 21st of March, which was the bottom. I'm going to add 127 day and 144 day. I got 26th of July and 12th of August. 26th of July is the first date of 127. 26, 26 is the holiday. 26 is the holiday. 27 is the lowest close, and from there the market moved up in a big way. There was a spurt in the market surged like anything, and the next date is 12th of August, where the market topped out just one day before on 11th. On 12th, there onwards the market tanked, it reversed, it corrected, and then market after that onwards, it was the sideways. Market moved up in a big way from 127 day to 144 day, and from there onwards market was as you know that 144 is either the beginning or the end. Here in the first case, from the 144 day, the market moved up in a big way, and on in the second case, from 144 day, market slide corrected, and then it remains the sideways for some time. Still date, it is like a moving in a narrow range, right? It is in a narrow range, moving up down like that. All right, this I recorded on the same day you raised the question. I think I am able to answer your question, and it's to all my students. If they have anything in their mind about any stock, any commodity, currency, or indices about, then they can raise me the question and I will try to solve their questions. And then with this I wind up this session with this. Good luck, goodbye, happy trading and happy investing to all my students. This is the chart of Reliance Industries. Again, I am going to make some working on it and testing the cycle of 127 days. The bottom, which was being formed on 23rd of March 2020, there, if I take 127 day from there, that is July 28th. July 28th is the one. This is 23rd of March plus 127, that is 28th of July. 28th of July is the exact top. The move is started from 23rd of March, formed a high, and from there onwards on 28th of July, the high was being formed. For the 3 days, it corrected in a big way, and from there onward, market was in a sideways movement. It was sideways movement for almost 48 days, or for it's up to September. Say it was somewhere near to 48 days, and then there onwards there was a big spurt and new high was being formed. It should also have some relation of some vibration from the previous movements. So this is the top. This is the top of 11th of May. This one complete swing, that is July 11th, 2020, and 127 day is September 15th of September, and 15th of September, and that is, this is the date, and on 16th there was the top. There is a just difference of 1 day plus minus a few hours, and that was the top. And again from there onward, the price slide in a big way, and then it is in a sideways movement or in a downward trend, in a till date, it is in a downward sloped channel. If this channel will be breached, then there will be a further fall. Now I have just highlighted that days from where I have calculated the 127 day. 23rd of March, which is now marked as a red line, and then 127 day from there onwards is July 28th. That is also marked as a red line. And the blue line is the top of that swing, first swing. And from 11th of May, 15th of September is the 127 day where the top is being formed. What we have understood is it's not from the bottom to top or the top to bottom. They are the four kind of different cycles. Here from the top to 127 day new top is being formed, and from the bottom of 23rd of March a new top was being formed. I sum up this, so I can say then there are the different cycles which can be calculated from bottom to bottom, from top to top, and from top to bottom and bottom to top. They are the four kind of cycles. One complete cycle is from top to top or the bottom to bottom. If I am calculating top to bottom or bottom to top, it's a half cycle. All right. So they are the four kind of cycles. Hello friends. Let's now test a very short cycle of 7 days. This is a chart of Shanghai Composite, and the bottom is formed on March 19, 2020, which I have placed, and let's put it in the chart. The bottom, which has been formed on March 19, 2020, and the first date, it is the 7th day, and then in the multiple of 7, I have selected 7, 14, 49. 49 is 7 into 7, and that 7 into 14 is 98 day. So I have selected I have selected 4 days where the possibility I will see how it behave. First, 17 plus 19 plus 7, that is 26th of March. And the price has made a up move, and from the next day started downward movement for few days. So 7 day the gain has sent is fatal. That is really can stop the trend at least for a day or 2 or 3 days. And on that particular day, if there is there may be a big movement or the probability of the reversal, or that can be a trend deciding range. What we learned in the concept of, and next date is April 2nd. That is the 14th day. Look at the market was falling, and this on one particular day, the price moved in a big way, on the 14th day. Let's select now 49th day, which is 7th of May. 7th of May, that is 49 days, 7th of May. And here it is the May 7th. This is okay. May 7th. This is the May 7th. This is the May 7th. Just 1 week back, price was made it down, and after the hammer formation for 1 week, market was clean upward without any correction. It moved up, and now next date is, that is 98 day, 25th of June. 25th of June. 25th is holiday. June 25th. 25th is holiday, and 29th is the next trading day. From there, look at the trigger. Big movement just in next 7 days or 7 days. It moved up in a big way, and then after that it was in a sideways movement. So out of all, the 98th day proved to be a very strong trigger point. That proved to be a very strong trigger point. 25th of June, where there was a holiday, so I selected 29th, and next trading day. From there the market made a low, short-term low, there was a correction of a day or two, and then from there the market moved up in a big way. All right, even this day there was a 7 days upward movement. Here it was a 7 days downward movement, and there was a uptrend, downtrend, uptrend, and downtrend. Now let's check uh, Dow 30. Dow 30. This is just on the demand of uh, few of the students. This is that we are, it's too long. 127 or 144 is too long. We are a swing trader. So give us a very short term cycle. So I am giving you the cycle of 7 days or 14 days or 21 days just for the swing trading. I am never believe in very small cycles. Best it is you take the advantage of big upward movement. When you are into one move, whenever there will be a 1 day or 2 day, there will be a big trigger, you will be able to take the advantage of it. So, but anyhow, it was on the demand. It was not in my plan. Here the bottom, and look at in 7 days, and Dow chart has made it top. 23rd is the bottom and 30th is the 7 day, and from there the market and the price corrected for some days, for almost 7 days, and from there again the next journey started. 14th day from there. Okay, that is 6th of April, 6th of April, and from there again the market corrected for 7 days, and from there the another bull market, another bull phase started, and in another 7 days the market moved up in a big way. The way it moved from 23rd to 30th March, again it moved from 6th of April to 13th of April. There was a good upward movement, and after that it slowed down, and then there was a sideways movement for few days. Now next is 11th of May. Again there was a correction for 3-4 days. There is the top. Before that, in 7 days, in 7, even 5 candle, big green candles are being moved from after making the bottom, moved up for 7 calendar days and made a new high on 11th of May. That also worked very well. And next date is what? That is 98th day. That was 49th day, and then now next is 98th day. 29th of June, and this is the 29th of June. The bottom was being formed on this, and look at, in next 7 or 14 days market zoomed up. All the 4 dates have proved to be working very well. They have given a good trigger point. 98 day worked very well. Even in Nasdaq 100 it worked very well. I'm not saying there is a guarantee that it will work very well. I'm giving you only an alert. It is not sure that it will work 100% on that day. It is an alert. Once you are overconfident, then you are going to attract the losses. It has worked very well, but it's not necessary that it will repeat its performance again and again. Every time it may not happen. It may happen 70% times, 50% times. But whenever you get a trigger and market and the price action is also supporting you, then you can take a call and you can take a trade. Without the price, don't trade on just the time. But yes, time is valuable. All right, now switch to another chart, the chart of Dow Jones Industrial Average. That is US 30, Dow Jones 30. This is a daily chart. Okay, let's put on the bottom 23rd of March. This is the same date. 23rd of March is there, and the 98th day is 29th of June. And this is 29th of the June. This is from there the market rallied. And before that there was a big correction. And from there the new triggers emerged, and from there the market. This is the power of 98 days. It is working. working in these chart may not work. I am not saying, but if the price action, if any candlestick pattern is being formed or there is a breakout from the trend lines, you definitely take a position and take the advantage. Just from 29 June, 7 days, 6th of July, look at it. The top formed and from the market started moving down. I'm just talking about 1 week now. And 22nd of June, that was just 1 week before, where the top was being formed, and 29 there was a bottom. Again market started moving from 29th and made a new high, then again formed a high on July 6th. Now this is the top which is being formed 8th of June. 8th of June. 8th to 7th day is what? 15th of June. 15th to 7th is what? 22nd of June. Look at it. 8th June is the top, 15th June is the bottom, and then again bottom is being formed on 22nd of June, and then again the bottom is being formed on 29th of June, and on 6th of July there was a top was being formed for 1 week. It means every 7 days we are finding the reversal points. Reversal points. It's not, if it would have been a fluke or guesswork, then there may not be a repetition. Now 8th of June minus 7, that is 1st of June, from where the market moved all green candles for the 1 week. There was a all green candles and move upward. In next 3 candles, price moved down, and then for the 2 days it was sideways. Patiently waited to time to come to trigger a new high on 15th of June. So all 7th day it is working fantastically in this chart. May not work in some, but I am giving you an idea, an alert, an introduction to the time theories. Now 29th of March, 7 day is 30th of March, and it closed almost at highest, and from the next day market tanked for few days. It was there was a correction about 23 to 40%. Next day it is 6th of April, from where again market triggered for another upward movement. There was a top on 30th of March, and on 6th of April, then again the market started moving upward. Next 13, next date is 13. 13 is again almost the top for 2 days, then it was the sideways, almost 2, 3, 4, 5 days it was sideways, and from next date is 20th. Next date is 20th, where a short term very in a sideways movement the top was being formed, and little some point the market corrected. And next now let's test from say from this top, this bottom of this top. There are the multiple tops, so I am going to select this 31st of Jan. Let's take this as a starting point. This is very important to select the starting point. This is the 31st of Jan. Then what would be the next date? That would be the 7th of Feb. This is the 7th of Feb. There was a continuously uptrend for almost 4 trading days, and from there the market started moving sideways. Okay, let's make it more bigger. We can will be able to understand. Then after 7 plus 7 comes to 14. This is a 14. This is also almost a top from where the market have never moved up, and from, although it was a sideways trend, but market never attempted the top of this except the first very second day. 14 plus 7, that comes 21. Here the market triggered the sell. Here the market triggered the sell and started moving down. Very clear sell signal on this point or 21st. I'm going to add 7 more to make it 28. Look, this is the 28 where the bottom was being formed and then upward journey, some retracement of this bear market started. Exact the bottom I got on 28th of Feb. Then I am going to add it. This was the month of 29th of Feb. So it is 29, 1, 2, 3, 4, 5, 6. 6th of March. 4, 5, and this is the 6th of March. Again, the market moved up and from there the again downward movement started. Although 5th was 8, then it is 29th, 1, 2, 3, 4, 5, 6. Okay, this is 6th of March. From there the market again nosedived in a big way. From this 26,000 it moved down to 23,688 in just next one day. All right, and then the next is 13th of March. Let's 6 plus 7, 13th of March. 13th of the March, market made a low and for just one day there was a pullback. One day there was a pullback. Again, market breached the low of 13th and started moving down. And then I got 13 plus 27. 13 plus 7 is 20. 20th of March is this date. 20th of March is this date. And 21st was the low. From there the market started moving up. There is an just adjustment of, I'm not going to say an error, because this move is very strong downward move. Even then, on this day, this 7 day, the market retraced somehow for next 4 trading days. From here the market moved down, but on 7 day it pulled back from 20,800 to 23,141, 3,000 point in just one single day. So this is the time to be alert. This is the time those who are playing the swing trading, they cannot afford to have big stop loss. They are playing on a very small stop loss. So there is a good pullback. From the next day it opened down and started downward journey. But this day, only one day, that on 7 day there was a trigger point. And then market was the last red candle, and from the next 21st is the date. 21st, 13 plus 20th is the date. That is the last day of the Friday, and then Saturday, Sunday it is 21, 22, and then it was Monday only 23rd. So Saturday, Sunday are the point of the adjustment. At sometimes when the new move starts on Monday, it get exhausted on Friday itself, because Saturday, Sunday are the part of that mood, and markets are not going to open on those days. It can be the Monday or the Friday, but most when market starts on Monday, it going to complete the journey on Friday itself. Very rarely it makes a new high on Monday and then starts retracing from the Monday itself. Monday it makes a low, and from there what we have the counts. All right, so this exercise we have done from the top as well as from the bottom, and it has worked very well for us. Now let's come on the current part of the chart and let's try to forecast. First, let's backtest. 9th of September is the bottom. Just go 7 days back. What that date is? That is 2nd of September. 2nd of September. 7 days, and there was a complete downward trend, and from 7 day the market started moving up, although there were the upward movements, but even then from the 2nd of September, 2nd of September, if we go back by 7 days, let's calculate 9th September 2nd minus 7, it is 26th of August, 26th of August. This is the 26th of August. After the doji is being formed, there was a complete 7 days uptrend. At the top was being formed, and from there the market tanked. And then on 9th of September, the bottom was formed and some correction emerged. Let's go 26 minus 7, it is 19th of August. Oh, it is a complete 14 days upward trend. There was, although a break on 26th of August, and new trigger emerged, but we can say this was a complete 14 days cycle upward. 14 minus 7, 12. 12. Then there was a top was being formed, and for the 7 days market was down sideways to with a downward bias. It was down, on bottom was being formed on 19th or the next day. From there the market rallied. Okay, 12 minus 7, it is 5th of August. 5th of August, and 5th of August minus 7, what it comes? 5 days of August, and that date comes 30th of July. Oh, 30th of July is exact the bottom, 14 days up, 7 days correction, again it was 14 days up. It is a cycle of 14, 7, 14, 14 ABC, it is being formed. A wave was for the 14 days, B was the correction of 50% of 14, 7 days, and again there was a uptrend for the 14 days. 19th July to 12th July. Now, 19th July minus 7, that comes 23rd of July. Then again it is the top, from top to bottom. Again 7 days there is a correction. It means 7 days correction, 14 days up, 7 days correction. Again it was a 14 days upward movement. It was a rhythm. It may not be repeated again and again, but you can find it many times. It's repeating this cycle again and again. We are working on the Dow. Here it is working perfectly well. There may be the chance in some other commodities or stocks or the indices, it may work differently. Here from 16th of July to 23rd, it was a sideways trend. First it moved down, then it again moved up. And then on the 7 day, it was almost at the same price, a little bit higher. Okay. Now, this way we have just maintained a cycle of 17 for almost 6, 7, 8, 9, months. We have consumed on this 7th of cycle. If it would have been a guesswork, then may not be working repeatedly, but it is repeatedly giving us a very good result. It means that we are working on a very well movement. Before I go on Nifty chart, I would like to talk now. 16th can be the top, and 16th can be the top, and then plus 7, 23rd can be the bottom, and from 24th there can be some upward movement. So this much we can just forecast about the okay, all right, this is the chart of Nifty 50. I'm going to start with this the top, which has been formed on 31st of August, and earlier we were working on the 7 days, 14 days, 49 days, and then we attempted 98 days cycle. Then in last lecture, we were working on only one 7 days or 14 days cycle. All I am talking about the calendar days, not the trading days. If we will take both together, then ego may be satisfied, but it's not necessary that we will be able to really make the difference. Now, suppose this is the 31st of August. If I deduct 14 out of it, what will be the outcome? It will be minus 14. What it comes? 17th of August. This is the 17th of the August, and this is the bottom, and this is a rally of 14 days. 7 into 2, 14. It is again a cycle of from the family of 7 only. This is a 14 days uptrend from this day of 17 to 31st. Now, if I deduct 14 out of it, what is the outcome? That is 3rd of August. And from 3rd of August, it took a rest on this 17th of August. A small doji was being formed. Earlier, I have explained about if there is a no big momentum on this particular vibrating point, so we will take this as a trend decider. High of low of this day is an important. If the price will move above the high of this, we can just take this, if I remove this line and can take the high and low of this day. This is the high. When we talk about the price, then it is tradable. Otherwise, with the price, it is not easy to trade. We can really forecast, we can satisfy our ego, but if we have to trade, then we have to just we have take price also in consideration, then only we will be able to take the right decision. We are not here to just satisfy my ego. Oh, on this day this has happened. Actually, we have to make money out of the trading, and that is possible only by joining the time and the price. Now, on this day, when the high point is 11,269 and the low point is 11,135, once the price moved above 11,269, it moved up and then retested it, and then there was a big rally, and the top was being formed on 31st, and then there was a big drop. All right, so from here, if I deduct 7 from 7th of August, 30, then we take a 7th of August minus 3 points of August and 4 of July. 31st, 30, 29, 28. 28 is the date. And 28 is, without fail, is the top, and from there the market took the correction. 7 days correction, and then there was a rally of 14 plus 14, 28 days rally. And this all are working. 7 is a universal number, but otherwise, say the Nifty may be working on some other number, or Dow may be working on some other number, gold may be working on some other number, or another number of cycle. But 7 we can try on all. It is a universal number. All right, so that is in the multiplication of 7 only. Here it moved, say 14 points, and then 14 days, and then 14 days, 28 days upward movement. All right, from here, if I deduct, say from 28, if I deduct 14, then comes the 14th of July. This is the 14th of July, and this is the bottom. 14 days uptrend, then again it was a 7 days correction, and then again 14 plus 14 days upward movement. So the 14 days is also working very well. For 14, or in the multiplication of 14, or in the division, if we divide 14 by 2, then 7, it is again in our. Now let's take 7 point from here, 7 days from here, for 14 minus 7, 7th of July. So this is the 7th of July, which is a top of this move, But here it was a sideways plus some correction. The bottom was formed on the 7 day, this top is here, but the market was working within a small triangle or a rectangle. All right, so then this was a downward movement, and from here it moved up, again moved down for 7 days, and then there was a journey. So 30 plus 7, then it is a clean uptrend. The bottom was being formed on 30th, or just 1 day before the 30th, and from there it rallied for 7 days. Now deduct 7 out of 30, what it comes? 23. Okay, this is the 23. It was a sideways movement, and from here if I deduct say 7, then what it comes? 16. So this is the 16. Price moved up and then corrected some points, and then this is a rally of 7 days. All right, so 7 and 14, if I remove say any one out of it, then we can identify this is a 14 days cycle. All right, so this way we can really identify. Now where this cycle will stop, somewhere it will be never 7 days, 7 days, 7 days, or 14 days, 14 days. Then at some point, then this cycle of 7 days may stop. How we can identify that? For that, you can just make a trend line. Okay, I have made this trend line by joining this bottom and this bottom, or you can say this bottom or this bottom. I have taken these two bottoms. I can just point them out. I think when it is not easy to identify the cycle, it is not simple also, but I am giving you an idea how we can really work on it. So I have joined these 2 points and have taken this trend line. Once this trend line is broken, then you will not take 7 days from here, from 31st August, that is the 7th day. This is the 7th day, but bottom is formed on 9th of September. So you will take 9th of September is your next bottom. 19th of September is your next bottom. So you will start count from here. 9th of September, then plus 7, 16th of September, plus 7, then what it would be, 23rd of September. Likewise, you can make a count, and then you can draw one more trend line. Why I am using only the trend line in the price action? Because trend line is nothing but a time price square, where the time and the price meet. That is the trend line, where the time and price. In this whole course, I am just going to underline what I am saying over here, where the price and the time meet. That is a trend line. You can, okay, before that I draw one more. This is the bottom, and now if I take this bottom, this low of this green candle, from there the market moved heavily up. Okay, let's take the bottom of this. Look at this. Look at it, how nicely the price was stuck within these two trend lines. Where the price is, if price drop to this line, this is time price square, 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 this is time price square. This is a continuous time price squares on this trend line, and once this, then it is breached, then it has become the resistance now. This has become the resistance now. Now from here the market has dropped, then new bottom or the top you will take for the consideration. Now 9th of September is a new beginning. From here you will take the count plus 7, then it will be 16th of September, and next it will be 23rd of September. Let's see how this behave in times to come. Forecasting means it is our observation. There is a possibility that it will happen. When we are predicting, we are saying it is definitely going to happen. So when I am teaching you the Gantt time cycles, I am teaching you to forecast, not to predict. All right. So then don't get biased by these results. This may work, may not work. This is an alert to you. Again and again, I am telling you the disclaimer. I want all you to be the winner. Grab this idea, absorb this in your subconscious mind, test the charts again and again for a very long period, then you can apply it or can use the trend lines and can get benefit out of it. Now, one more trend line we can have with this bottom and this bottom. If I join these two bottoms, so you can find that this trend line is being breached, right? So then you will take a new count from here. So you can start with this count. This is 18th of May, and you if add 14 to this, so what it comes? Let's do this small exercise. I am ready to take challenge on most of the charts, right? So this is 18th plus 31st May, it is 13 days, and 13 and 1, it is like 2nd of June or the 1st of the June. All right, this is 2nd of the June, and there are all the green candles up to here. Then although the price moved up, but these are the some red candles. If we add 7 to it, then next date is 9th of June. Okay, 8th was the top. From the 9th, price started moving down. All right, so this way we can make our study more stronger and more powerful. And if we add 9 to 16, 9 to 7, then it is 16, from where the rhythm started, where these all counts are going to match what we have just attempted or tried till 31st of August. All right, so even I have just explained you one more secret of the cycles, how to play on it. Okay, but I don't want to overload you with so many ideas. Let it be simple. I have just given you a few formulas. You just try on it, and then I wind up this session with lots of blessings, lots of love to all my students. Happy trading and happy trading and happy investing to all my students. Lots of love and the blessings.
Small example, I say the market is very scientific, very scientific. Technical analysis purely about forecasting, how we can judge the next move. If we can judge the next move correctly, then we are the winners. Somebody can do the exercise. Do you get this date of 31st of August? If
30th August आता third time
30th of August, and this is 31st of August, there is an error of 1 day. We were alert on this day. The probability is the market can fall from there. From here the journey started on. If I just take the bottom of this and then the next bottom, now you look at it, till the time the price is above this trend line, market is bullish. Market breached on this particular day. If I don't know the trend line is being breached, it means this bull run is over. Now the probability is market can be sideways, or what the best can be, market can reattempt this trend line. Market can maximum can go to this trend line and again it will fall. Say if I say that market can move to 12,100, the maximum, from there it will fall, or otherwise keep falling from here also. For this I can make a new trend line. Now this is a long-term trend line. Suppose that when market started moving down, I can make a trend line with the two tops when market is falling. When market is falling, trend line is the easiest and the best method in technical analysis. And we give very less weightage to this tool. I say trend line is time and price square, where the time and price both meet. Here this is the price, and here it is the on x-axis there is a time, and on x-axis there is a time, and on the y-axis it is the price. Whenever the price meet again and again, here it is a time price square. It is very near to time price square. Here it is near to time price square. It is multiple time price square. When the price and time meet, this is a most scientific thing. It was falling, and from there when the price moved above this triangle, a triangle is being formed over here. This is a triangle, symmetric triangle. Whenever it is being breached, then prices started moving up only. So you can use the trend line. This only one tool. If you can master, you can be the master of stock market. All right. So are you? It is clear that whenever the price is moving up, you have to join two bottoms, and when the price is falling, then you have to join the two tops.
This is an introduction to pitchfork. To plot the pitchfork, we need one complete swing and the correction. One complete swing and the correction. Suppose we can pick two tops and one bottom, or the two bottoms and a top. With this, we can form the pitchfork. Let's start it. I have picked first top, then I have just plotted on the bottom and drag it down to another top. One swing and one correction, or reverse trade, reverse movement. So this is being plotted a pitchfork, and this is the upper border of the downward sloped pitchfork. All right, this is the upper circle where the price managed to take the resistance again and again. Once this resistance was being breached, price retested this upper level of the pitchfork, and from there the upward journey started, and from there the price zoomed to a new high. All right, most of the time after breakout, trend line is retested by the price, but that's not a rule. All right, so once the price have moved outside the pitchfork or the border of the pitchfork, then price retest and come closer to the pitchfork. That is an opportunity to buy with a stop loss of the low of that swing. Whatever the low of the swing, the second line which is being drawn, keep the stop loss of the low of the last swing. So that way you can initiate with a small stop loss, you can initiate a trade. Let's clean it out and try to plot another pitchfork. I have selected a bottom, now then the top, and then the correction, then I have picked up the bottom. So this pitchfork was formed in the year 2008 with the base of 2002 or 3. And this pitchfork has worked for 11 years. Price was within this range for 11 years. Market price of Nifty has retested again and again the border support of this pitchfork. All right, if I can highlight this, then you will be able to see how many times this border or the support line of the pitchfork is being tested again and again. 1, 2, 3, 4, 5 times it's been tested, and the 6th time, once it breached, the price moved and made a new low of many years, almost 4-5 years. then that was a new low that was been formed. And this is the middle line. Here also you can see this has worked as a very strong resistance. This midline has worked as a this 1, 2, 3 times here, then 4, 5, 6, 7, 8 times or 9 times, even more than that. This is a weekly chart. So we can say if we can plot 9 times the resistance, it means on the daily chart there will be many more. I have just promised you to how to deal with the whipsaw. This is the first whipsaw where the price moved above the middle line and then again with a stop loss moved below the middle line. So I am going to plot a channel with the middle line and the first top which was being formed in year 2010 or July-August 2010. And now you can see on this channel, instead of the middle line, on the top of this channel, the price has taken a resistance many times. Market can take and we can get a hit stop loss once, but once we have managed this with the same trick I have used of making a channel with the base resistance and the breakout high, then we can find multiple tops on it and multiple support on this level also. The price once breached, now it is going to re-enter into this channel. If it has re-entered into this channel, this may work as a resistance. First, if its resistance is broken, then the middle line will be your target. That will be 12,000 something. That can be the resistance, next resistance or the target that can be achieved easily in times to come. Now, how we can make out a level where the price will take the support after breaking this 11 years pitchfork channel. Let's take half of this channel and half of half. So first I have taken a half of this channel and then taken a support line which comes somewhere near to 7,177 and 25% of this channel. This is another arrow I have just marked, and I'm going to plot and this is now 8,278 to 7,171 is a demand zone. This will work as a demand zone. If whenever the price will come near to 8,300 or 8,200, this will work as a support. But once this will be breached, then we can see even the lower level. The probability is now this I have plotted on this current scenario. This is another scenario which I have taken now on 27th of April 2020. Price has corrected back to the middle line. This is a new pitchfork I have plotted. It has taken a middle line, and that if this will be crossed, it can reach to the upper band of this pitchfork, which is somewhere near to 12,025. And if this middle line will work as a resistance, so the probability is market may again retest the lower levels of the band. It may move sideways within this range, or otherwise it can test to the upper band. With this, I wind up this session. Wish you a good luck, happy trading and happy investing to all my students. All right, let's start to learn the secret of pitchfork. Pitchfork, I have taken the bottom and the top, and after the correction, the higher bottom. All right, I am going to place it. But can you find any relevance of this pitchfork towards future trading. I am just going to make some adjustment into this, and then you will be able to see the wonderful results. Look at this. Now what I have done, I've taken a bottom, then the top, and the middle line of this pitchfork is being fixed at the higher bottom after the correction. This bottom, and with this you look at the wonderful results. This bottom is being selected. That is the lowest low on the slope, and the bottom, these two areas which are important, and the lowest low, the bottom from where the market reversed, and the top of this first upward swing. So now if you look at the results, this is the chart of Nifty 50 index, and then you can see how nicely resistance and the supports are working very well. All the lines of this pitchforks are working like a very good support and resistance. 1, 2, 3, 4 times it has been taken a resistance, and now look at the support. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, and after on 11th day when there was a fall below, that becomes the resistance. For 3 days market made a resistance over there and corrected once. Now look at this. Now the current rate of Nifty is 11,939, and then if the price may take a resistance somewhere near to the this resistance line and resistance red line, and from there the market if moves up, then there will be a further upward trend, and this is the last support of this pitchfork. Once this will be breached downward, then we can see a big drop or big fall in the price of Nifty 50 index. All right, so this is the way. Once you are going to draw any pitchfork, this higher bottom or the higher top, lower top, you should take this as a center point, should take it as a middle point. Then you will get very wonderful results. This is a secret of placing the pitchfork where we can have real results, real strong results. All right, so this is a small study which has been explained to you. Now let's club time cycle with this pitchfork, support and resistance levels of pitchfork. This is the bottom which was being formed on 18th or the 20th, 18th of May, and then from where the next bull market triggered, that was 20th of May. We can say plus minus 1 day. All right, so 18th of May is the lowest low of this move when the market dropped. Plus minus a day, we can take 19 or 20 May 2020. Now let's add 127 day and add 144th day. Let's add 144 day. So we have got two dates, 22nd of September and 9th of October. Plus minus a day or so. All right, which dates we have got is 22nd of September. 22nd of September, this is the day, and after 2 days on 24th there was a bottom, and from there the market zoomed or rallied. Within next 15 trading day, market jumped like anything, more than 1200 or 1300 points. And if we can take next day or next day is the holiday, 10th 11th is the holiday, 12th October, and that was this move from 10,800 to 11,900 just in 15 or 16 trading days. One clean. Now we have the channel, our price was quite near to the lower bottom, and once the price breached above the resistance level, but our cycle of 144 completed, and that was the highest high. That was the highest high. There we can take the judgment. On the next day, on the 13th of October, there is a doji. We can make a high low of this and can see that if the price will move above this, we can hold our buy position, and if price will drop below this, we will take a sell position. Or otherwise, once the resistance of 11,927 or 41 is being breached, the price dropped like anything in one single day. And today market is trading again at that resistance level from where the market triggered a big drop, and market dropped by 350 points in one single day. So this way we can calculate. This is a small example combining the pitchfork with the cycle of 127 to 144 days. This is a very small example. We'll take at least 10-20 more examples, and then we will be able to drive at a position that this is the optimum level. We will follow the same system which was being followed in the previous course of Aurora candle. In a same fashion, we will proceed in this course, and will add more lessons to reach to the optimum level. Till then, good luck, goodbye, happy trading and happy investing to all my students. Hello students, this is the chart of State Bank of India, daily chart, and we'll try to plot pitchfork in three different ways. This is a correction. This is the bottom, and there was a correction. I'm going to pick the pitchfork from this bottom, and now we'll take a second spot which is the highest of this swing, and we'll try to match it to the bottom of the basic concept is we start from the bottom. If market is moving upward, it's moving up, then what we will do, we'll take a first bottom, then from the top when there is a correction, we'll try to fix the 3 points, and then we will get the next support and resistance by plotting the pitchfork. As this is the first method, this is the normal method. This has been adopted by almost all the investors or the traders. On this bottom line, we can find there are the two wonderful spots, and then on the middle line there was a very perfect resistance. Two candles, this large candle and then doji, both have taken a resistance on this, and this is earlier also this candle has tested somewhere near to the middle line and corrected from there. So the bottom as well as the middle line have worked very well on this pitchfork. All right, now let's try the second method, what we learned earlier also. Again, the bottom is the same, top is the same. Now what I'm going to do is just going to fix the middle point on the bottom of the corrective move or corrective wave, and this is what I have got, a new kind of pitchfork with new support and resistance. And you find it, this line has worked like a wonderful resistance, not for a 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, continuously for more than 10 candles which has taken a resistance on this. Once it was a breached, then there was a large candle, and from there corrected back, and again today that State Bank of India has tested on this resistance line only. So this is the second way which has worked wonderfully. Okay, let's try this new method, the third method which I am going to talk to you about. Now I am going to pick the lowest low. This is a swing. Was the major correction. This was the major correction from where after the formation of the bottom. This is the bottom which has been formed. After that, I am going to plot this, and I am just going to take the first swing. After that, market moved up and then again fall back, right? I have not selected the complete move. Just look at the support and resistance, the perfection of support and resistance. Perfection of support and resistance. I have not picked the complete one move. Just look at it. I am just going to highlight. This is the middle line. This is the middle line which has worked very well as a support as well as the resistance. First it has worked as a resistance, then it has worked as a support. This middle line of lower band, this has worked as a very good support, just clearly we can identify. And then this was the lower band, the bottom of the lower band, and here the multiple supports, multiple times the price has fallen on it and then moved up, has taken a support on this line. Now what I am going to do, again, this is again the middle line which has worked as a resistance. Now what I am going to do is, I am just going to make a copy of it. I am just going to make a duplicate copy of this pitchfork and going to plot it just below the bottom of this earlier first pitchfork. I am going to plot it on the bottom of the pitchfork. Now look at it, how nicely it has worked. How nicely it has worked. It has really given a support and resistance to each and every move, This is one of the perfect formation. I am not teaching you a technical analysis. I am a researcher. I try to keep doing many experiments, and few experiments work like a rock. Which are being repeatedly giving us the good results, that becomes the rules. Alright, so this is the formation of the third way. This is the third way to plot the pitchfork, which I have applied on State Bank of India. I have applied on many other stocks also, which has worked there also perfectly. So, but in this State Bank of India, as one of my student asked about it, is this the pitchfork is right or not? Yes, I want to say that pitchfork which the student has applied was perfectly right, but I have just now given you 3 different ways to plot the pitchfork, which will really enhance your capability of research and trading. With this, good luck, goodbye, happy trading and happy investing to all my students. Hello students, we are going to learn the regression trend, how to plot the regression trend. Just in the last, you can see this is the regression trend. I am going to click it and then I am going to place it, say, from the bottom to till date, and automatically you will get the channel. Look, all the support and resistance of the channel are being formed automatically. You need not to worry, or you need not to take any bottom or the top. You don't have to adjust anything. It will be automatically, this channel will be drawn. This is the chart of Nifty 50, and here this chart, this regression trend is being formed. Question is, till date we have this channel. How to design it for the future? You just have to extend the all 3 lines, lower band, middle line and the upper band. You just have to extend the lines and you will get the future support and resistance. Now all the 3 lines are being placed, the upper band, lower band and the middle line. Now you can draw the regression trend, say from bottom to say any date, say 29th of May. I have selected it till 29th of May. You can select any point. Better it would be top to bottom or bottom to top, but you can select any. But you look at it, the middle line I am going to select, it has worked at a good spot also. Which prices which were not falling either on the middle line or the bottom or the top, it has worked like heaven. And now even yesterday on 20th of October, it has taken a sport on it. Earlier also it has taken two times it has taken a sport on it. Even today, from this level only, the price moved up. So we can, now I have just explained how to draw the regression channel. Now let's work on the chart of Reliance Industries and find the next top and bottoms. Now let's work on the Reliance Industries. This is a chart of Reliance Industries. Let's remove these cycles, time cycles. Now, okay. Now let's plot regression trend on it. We can draw from bottom to randomly at any point. Let's plot it from bottom to randomly. Okay, fix it here. Now I can plot the same from bottom to top, bottom to, okay, this top. Now I can plot from bottom to till date. I can plot from bottom to till date. Here it is. And you can notice that price has dropped below the all three channels. Means that price is showing that Reliance Industries in times to come is weak. This is the first observation. Let's fix out the from bottom to till date. Today we are on 21st of October. Now today even the price is moving up, but bullish it will be when it will re-enter into this channel. Until unless it's not going to look at this. This was the top was being formed and then the price re-entered and then there was a big drop. Now if the price will move within this channel, then there is a probability that it will move further high. But let's plot another regression trend on this downward trend. All right, today it has tested the middle line. First hurdle is this middle line. If the price will move above this, then we can think it can go or re-enter into the main long-term regression trend channel. Now let's fix out the roadmap for the future. This is going to be the main hurdle, downward sloped resistance, and this is the support. This is the support. Once this support has been breached, it can fall by more than 10%, because this is a 6 months or 7 months uptrend and the price has breached the long-term regression trend channel. Now if it will re-enter into this regression channel, then we can think of buying. Then it will be very bullish. Otherwise it's in a bear trend and the probability is, now look, this is upward sloped, the bottom trend line of the main regression trend. If this is also going to be work as a main hurdle. Now there are the two hurdles. One, the upper band of the downward sloped channel. Now this may move within this channel, or if this channel is being breached, then there is a probability it can fall heavily. Now today it has retested the middle line. Let's see how it work out. Now I have just worked on regression trend for you on the chart of Reliance. We'll try to do it in many more stocks, index or the commodities, where we will take an idea for future forecasting. Till then, good luck, goodbye, happy trading and happy investing to all my students. Hello students, let's work on this live trading session. Now the downward sloped channel is being breached by the price, retested, and it has fallen drastically, almost 10% from after the breakout, or even somewhere near to 6-7%. It has breached from the lower band of the downward slope channel. There are the two channels. One is for the long term and another one is the short term. That is long term chart. That is long term channel is also been breached and the short term channel is also breached. Let's find out the target till what point it will fall. It will be the make or break point. I have just made a copy of this long term channel and I am going to place it just below this channel, this long term channel. All right. So I am going to drag it down and I have just placed below this channel the same. Now price is just at the lower band, just at the lower band. So what we can do, we can take a one chance over here. This is make or break point. If you have studied the candlestick, this is a formation of hammer, and if at the closing, if this hammer is being placed, then we can initiate a buy trade over here with a stop loss, small stop loss. Now what we can do is, first is there is a formation of hammer, and now if we can take, and it is above the lower band. It is just tested the lower band, it fall below and now just has re-entered into the channel. So this is where we can initiate a buy with the stop loss below 1840. We can take a buy position with the stop loss of 1840, and 1840 is also a gain level also. So there is a double confirmation. It has just taken a support on the mentioned level. So we can initiate a buy over here. Where it can reach, now it can test to 2058. If my target is the lower band of downward sloped channel, from where it breached and it retested and has fallen, that would be my target. 2058 is immediate target, from where I will be able to decide. If it doesn't work, if suppose fall below the lower band again, then what would be the next support level? Then it will be the lower band of this support level will be the target. But now, as it is in the live trading session, as it is trading above within this middle channel, so I will initiate only buy with the stop loss of 1840. If that stop loss will trigger, I will take that stop loss happily. I will not get worried why there is a stop loss. It's trading near to 1878, so my buy is above 1870. So with a stop loss of 30 points, I can take a trade. Suppose there is a stop loss is being triggered below 1840, and then price starts moving above 1870, I will again initiate a buy with a target of at least 2058. All right, so this was a live trading session, how we can trade with the channels, and hopefully you would I think all the students like the live trading sessions, and on the point when there is odds are in our favor, we should really initiate a trade. Risk reward is very much in favor. The risk is about of 30 points and the probability of winning is much higher, that is compared to what the stop loss is. With this, I wind up this session. Happy trading and happy investing to all my students. Lots of love and the blessings. Okay, all right. What is the risk? If I ask you, what is the risk? What is the definition of the risk? What you will reply? So let's find out the meanings of risk. If I go to the dictionary, I can find the meaning of the risk is danger, jeopardy, peril, hazard, manic, threat. And there is one more word which is pointed out, that is possibility. Can you think the meaning of the risk can be the possibility also? So what the conclusion is, that risk is equal to danger plus opportunity or the possibility. So this is the one. Now, after just finding out the meaning, I visited the Wikipedia. Wikipedia has mentioned that intentional interaction with uncertainty is the risk. It means we all are aware well in advance that there is risk. Even then we are going to take the risk for the purpose of making the higher returns or higher profits. We all want to make the higher returns, and the higher returns are exposed to the danger of losing also. So comes the financial world. What that financial world is? Hurdle rate. It means what? I am going to demand the premium for taking my risk. So the hurdle rate is risk-free interest rate plus the premium for the risk I am going to take in a particular venture or investing into an asset. So this is about the risk. Once we understand the risk, then question comes how I can measure the risk. One of the wonderful tool to measure the risk is standard deviation. Standard deviation 1 covers 68.2% data, standard deviation 2 covers 95.4% data, and standard deviation 3 covers 99.7% data. And as we have understood, I have explained that in regression trend, we are using the standard deviation. So once we change the standard deviation, the outer borders of those regression trend will automatically change. Say if I will plot standard deviation 1, it will be a smaller range. When I will plot standard deviation 2, then it will be a bigger range, and standard deviation 3 will cover 99.7% data. Hello student, this is also the live session of regression trend. I have placed a regression trend over here, and the price has breached below the lower band. Earlier also, what it happened? Earlier also it breached the upper band and re-entered into this. Why this all happens? Why they are the whipsaws? As we have understood that standard deviation 2 covers only 95.4% data and standard deviation 3 covers 99.7% data. So let's plot one more regression trend channel on this, and here if we'll go into the setting, we will be able to change the deviation. Now I have just changed standard deviation from 2 to 3, plus 2 and plus 3 and minus 3. I have got a bigger band. Now you look at it. Now it has tested the lower band of the 3 standard deviation channel. Can this be a very good opportunity to buy? Because once we have understood that the channel which is being formed on the standard deviation 3 covers almost 99.7% data. So if can I initiate a buy over here, let's try a downward slope also within the channel. One more channel within the channel. This is based on 3 standard deviation. Now go to the setting and let's change from 3 to back to 2 standard deviation. Upper band and lower band also -2 standard deviation, and I have got this. Now the price has entered into the main trend of standard deviation 3 and downward slope trend at standard deviation 2. This when we should take a trade when odds are in our favor. At this point we can initiate a buy over here with a small stop loss. Let's extend the trend line. This is the first support line. If it will breach below, then it can be a downward continuation of downward trend, and this is the another upward sloped support line. So these two support lines will be helpful in the trading for the next few days. If we are ready to buy at this point of standard deviation 2, then we can have a very good upward movement in times to come. Now this is the chart of Nasdaq. How we can play with standard deviation 2 and 3? Can we apply the both channels on this chart of Nasdaq 100 also? This is standard deviation 2, where the price has been fallen again, as in it was in US 30 in the Dow Jones Industrial Average Index. First we'll go to the setting. From 2 I will change it to 3, and again lower band I am going to change it to 3 again, and I have got then a wider channel. Now it has just tested the lower band of standard deviation 3. This is a make or break point. Market can fall below and can continuation of the downward trend, but if the market will start moving up from this point, then there is a no doubt that there can be a very strong pullback from standard deviation 3. This is a buying opportunity, and from here I can initiate a buy in both the charts, Dow Jones and Nasdaq, and that pullback may be very strong, very strong. Let's see if there will be a bull trend, we'll make money. If it will be a further correction, then there will be a stop loss to it just below the lower band of the standard deviation 3. All right, with this I wind up this session and wish you a good luck, goodbye, happy trading and happy investing to all my students. I am happy to cover this class. This is the chart of Nasdaq. This is the lower band of standard deviation 3, and from here in the last lecture only it was being recommended that here we can buy with a small stop loss. And you look, this is the regression trend standard deviation 3 chart, and this is the middle line where it touched and corrected from there. Today it is the 9th of November, and from there the market touched the middle line and corrected back to 12,188, almost dropped by 200 points, and it has moved from the low of below 11,000 and it has turned to 12,400 in just 6 trading days. In just 6 trading days, such a big return or such a big spike in the movement of Nasdaq 100. So regression trend is one of the wonderful tool where we can use the standard deviation 2 and 3. I'm just going to remove the shades of the regression trend channel where you will be able to see the movement of the day. Look at it, it just touched. It is the candle. This is just touched this line and dropped from there. It opened, it dropped, and then moved up, and then it settled somewhere near to where it opened in the morning. And this was an opportunity which was somewhere near to 11,000. It has reached to 12,400 in just 6 trading days. That is the power of regression trend standard deviation 3. Most of the people use standard deviation 2, but standard deviation 3 is more powerful. But sometimes we miss the opportunity. This is the chart of Dow Jones. Here again, it was at the lower band of standard deviation 3. Both channels, standard deviation 2 and standard deviation 3, are being already marked over here, and then price took the support somewhere near to the lower band of the standard deviation 3. It was again in the last lecture it was being recommended to buy, and it crossed even the middle line but could not sustain and has dropped back to middle line. I think this middle line will work as a good resistance, as it has been proved in the chart of Nasdaq 100. Same may be applied here in the chart of Dow Jones Industrial Average Index. But it was in a momentum, so it has crossed the middle line, but it has then dropped back and it is been settled somewhere near to. Price was near to 25,800, where the buy was being recommended. Now it is trading at 29,452. Wonderful experience. All right, now this was the chart of the Reliance. It was being set in the last lecture, 1140. stop loss 1140 and buy above 1170, and with the target of 2058. Successfully it has achieved 2058. Now even it is trading at 2050 in just 4 trading days. It's now again this resistance line which is sloped downward. Reliance it has just moved up. It has given a pullback from the standard deviation 3, which is a make or break point. If it would have been dropped below this level, then would have tested even the lower band of third channel or the third regression trend channel. Now look at the chart of the Nifty. All three have worked very well, and Nifty was in a triangle. It has given a breakout. There were 2 runaway gaps, and it is moving up 12,461. It may behave different from the chart of US 30 or the Nasdaq. It has just given the breakout. It has potential to move a little more further. How far it can go, let's find out. The resistance line, resistance is at somewhere near to 12,815 or 12,854. These two lines will work as a good resistance, or the possibility is that price may be able to achieve 12,850. I am happy about the one thing. That one thing is that on 3rd of Jan, I was able to forecast on November 9th there will be a big movement, or market will be very volatile on 9th of November, and it proved and hold good. How it has worked? Gold dropped in a big way, even silver dropped in a big way, and Nifty and Dow Jones and other equity markets moved up. There was a big movement. I mean, it's now the history, but that 9th of November was being forecasted early in the first week of January, on 3rd Jan 2020. After 10 months, it has proved and hold good, and that's all God's grace. That guesswork has worked. That's all. Guesswork worked only. That I can say. With this, I will wind up this lesson, this lecture, and wish you great coming festival season. With this, good luck, goodbye, happy trading and happy investing to all my students. Hello students, how are you? This is the chart of US 30 Dow Jones Industrial Average Index. In last lesson, we managed to recommend buy at this point. This is the lower band of our regression trend. From there, the market started upward journey, and this is the middle line. Price crossed above this but closed below this midline. Next day, next day, and for another 2 days, it managed to work as a resistance. This center line worked as a resistance, and after that, it has converted into the support line. For this day, price opened on this center line and marched up. Next day, market corrected back to this level, and then this today market is trading. It has tested the midpoint at 29,685, and still it's here for the last almost 1 hour or so. There is still some time to close the market today. Let's see if the price closed below this or not. Now, what it should be? These are our trend lines. As per the time theory, what are the possibilities? Let's work on this. 23rd was the Gann date. 23rd was the Gann date from where the market started falling down, and for 1 week, we have learned the cycle of 7 days from 23rd to 30th. For complete 7 days, market was in a downtrend, and on 30th of October, it formed the lowest low, and that low was on the lower band of the standard deviation 3 of regression trend. From there, we took a chance to buy the Dow Jones Industrial Average future. From there, the market started moving up. What were the possibilities? This was the first hurdle and second hurdle, and this is a final hurdle, which is a center line midpoint. If the price hold about this line, then it can march for, then it can approach to this red line and this black line. These are the main resistance. All right, but now as per the time theory, what the possibilities are? Will it touch upward or not? Let's see on it. From 23rd, market moved down for 7 days. It formed a bottom on this day, and from here the market started moving up. For the 7 days or 14 days or 21 days, say, let's say for the 2 weeks, the market is in uptrend. What would be the top? This is 12, this is the 13, 14, this is 14. No, 14, 15 were the Saturday, Sunday, and on the Monday market made a, let's say if this is a 14th day, and from there the market formed the high, and for the next 2 days, on the Wednesday and on Tuesday, the market could not breach the top formed on Monday. It has so this top, which is 30,089, or the top formed just few days before, was on 9th, that was 30,101. If this top is being maintained, the possibility is market can correct. If it is so, then market should close below the midline of regression trend, and then for the next trading days, for next 5 days, market should approach to this level of 28,910, or if this level is also being taken, then we can see 28,000 or 27,945 in next few days. For 7 days at least, say from if the 16th the price has started downward journey after forming the top, then add 7 to this, then till 23rd of November there should be a downward trend, and the possible price for this is 28,900, or if this is being taken, then 27,945. So the big movement is possible for next few days. Let's see how the price will move. This is the small I've tried to combine both the studies of regression trend lines, as well as the time theory which we have learned. Let's see what will happen. This was our very successful trade, where we initiated a buy at rupees 20 somewhere near to $26,283, and the price reached to 30,121. It's almost 5,000 points, the journey from within 7-8 trading days. So that was a successful trade, and which is been now combined with, and now the further forecasting about how the price should move. All the technical analysis are about forecasting. If we can successfully forecast, then we can really master this trade and make money into this. I wish you a good luck, happy trading, happy investing to all my students. Lots of love and the blessings. With this, good luck, goodbye. Hello students, how are you? We must understand how the market behaves. Total market is a geometry. Market moves in a trend, then it goes sideways. Market moves, or any price movement, it takes a trend, it moves sharp movement, and then it consolidates in a narrow range. After that, there is again a breakout, and then again market rest in a sideways movement. It's either the bull trend or the bear trend. It's in a bull movement or the bear movement. It's keep repeating the same. One big move, then the consolidation, back one big move and the consolidation. One big drop or the distribution, pull back and the distribution, and then again then drop and then distribution. So market keeps moving. I have made a flag pattern one on one. So market normally behave like that. After a trend, it can be a flag pattern, it can be a triangle, it can be a cup and handle, it can be a square, it can be a rectangle. But market make a good move and after that it consolidate. It is keep repeating again and again. You should understand. If you can understand this, you can understand the whole concept of the market. First, how the market starts a big sharp movement in one direction. There should be a breakout. Before breakout, there should be a consolidation. As in Dow theory, it's said, then there are the three phases of the market. First phase is the consolidation. This is a chart of the Dr. Reddy. You look at this for months from July mid to it was May mid. That market was consolidating within a small range. There was a breakout and then market falls back into the same narrow range or that sideways movement. And second time when there was a breakout, market here you look at, this was the first breakout from this rectangle which was being formed by the price making same high and the same lows again and again. And again it entered into this zone, and second time when it crossed and there was a sharp up movement from 2464 to 4300, almost 2000 points or 1500 points. After that, for a month or so, or for 20 days or 1 month, it was in a consolidation period. It formed a triangle. After that, again there was a breakout, but this time it was a flag pattern, sloped downward. And third time again there was a breakout. You look at this chart very carefully. Look, this is a flag pattern, formation of triangle. After that it was a formation of flag, and then again there was a breakout with a full force. This was from 4200 to 5500. Again the price repeated the same pattern, which is the second pattern. It is the same, it is being repeated, only volume it is different. Market moved up comparatively with a higher points and dropped also with a higher points, but pattern is same to same, dot to dot. There is a no difference. Only the size, there's a differences of size. Otherwise, it is a repetition of the same pattern. And after that, again, it has given a sharp breakout from this downward slope pattern and this rectangle, and then there was a again sharp rise, and this sharp rise in force by now. So what we can understand by this chart is, it is not this chart or Dr. Reddy. You will pick any chart, you will find that every chart will show the same pattern. There is a sharp rise or the sharp fall, and after that then there is a pullback or there is a drop, and after that then there is a again market moves in the same direction. Now what pattern is being formed now? After this a sharp movement, there is a rounding bottom. What the next possibility is? If it will break this neckline, this black line, which I am calling the neckline, which it will cross, then there will be a further up movement. If not, then there will be a correction from this point. Now, how long it can go up? You just measure the size from the bottom of the cup to the neckline. That should be your first target. But the only condition is it should break the neckline. It should move above the neckline and hold above the neckline. Or what the second possibility is, it may consolidate here for some more time. It may make a formation of cup and handle. If it will form the cup and handle, it will consolidate for some more time, and after that there will be a breakout or then the break of the cup, and then price will drop from here. So we are at a make or break point. All right. So we should understand the patterns, the price action. There is nothing better than the price action. If we can understand the movements of the market, one thing is certain, the market moves in a big way and then it takes some rest, and in that period it forms something like triangle or all the geometric pattern. This is a half circle, which I am calling it the rounding bottom is a half circle, or it can be a diamond shape. All right, here we can see very clearly after a consolidation period, there was a big breakout, and after that again it consolidated, and from there again it has moved up in a big way. Market moves in a big way and then takes rest and again reinitiate the same pattern or same trend. All right, it was a rectangle for a very long period from October 2019 to till August 2020. It was a very long period of consolidation, but once the breakout took place out of this box, and it was a sharp rally from 2,800 to 7,000 plus. It is more than double in very short period, right? From August to till we are into December only. Price moved again in a, what I told you, look at it, any chart. It moved up and then consolidated in a symmetric triangle. And from there, the symmetric triangle, there was a breakout and it retested after some time. You look at the one big red color hammer also. All right, you can see that priced, and then it was a sharp movement till 7,570 from 2,800 in a just 2-3 months. This was the formation of a flag pattern or a trend, and from there the breakout has taken place and market moved. If we can understand these patterns only, then that can help us to win in the market. Now look at this chart of Infosys. What we have learned till now is that there will be a big movement and then market will consolidate or moves in a sideways pattern, and again that trend will resume. But here you look at market was in a consolidation period, but that consolidation period was also an uptrend. That was also in uptrend, and from that rectangle, when there was a breakout, it was a repetition. What we have learned, there was a sharp up movement and then price consolidated in a symmetric triangle. Look at this. I am just going to form for you. All right, this was the formation of flag or the symmetric pattern. From there again market moved up. This was a clear triangle. This was the clear triangle, and from where the market moved up in a big way. Now here the price has taken a breakout, and from there the market moved from say 8,000 say 80 to like 1120, and market was, that was the second pattern which we learned, that it will be not a symmetric triangle, but it will be a downward sloped flag pattern. All right, it has been into that downward slope flag pattern or a triangle, from where there was a breakout mark, then price retested that trend line or neckline, and from there the market is moving up. This time, just understand very carefully, this time there was not a sharp rise. Market is moving up, and market is moving up, but it is moving here. You look at, once there was a breakout and then he retested, and then price moved up, but it is moving up at a angle of say 17 or 20%. It is moving up in a channel. In what it happens in a channel, market keep correcting after very few days. After there was a 3 days up move and 3 days market is down, and one day there is a bull movement with full force, and then there is a correction, then there is a bull market, and then there is a correction. It is not the same pattern which we have learned, a sharp rise and a consolidation. Market is moving up with the consolidation. Market is moving up with the consolidation. It is moving up, down, moving up. It's moving up in a channel. If this kind of formation is, it means that market is, or this stock or the index or the commodity is very bullish. It will keep moving up for many days. It will keep moving up for many days because it is consolidating within its trend. Now you look at, I have just placed, if there is a sharp rise that can be of 60 degree, 70 degree, 80 degree, 90 degree, or it can be, not can be more than the 90 degree, but it can be 80, 70, 60, 50 degree. With the 50 degree force, it can rise and can form a flag pattern. But this time, when it is moving up in a channel, it is moving up at what degree angle? Let's form that. It is moving up at 17 or 18 degree angle. If, say, I tell you, for an example, you shoot a pistol at 90 degree, wherever the bullet will go, it will fall back to the same place. But if you are going to fire that bullet from your rifle, then it, at the degree of say 17 degree or 20 degree or 25 degree, it will move. It will remain in the air for a longer period. It will move in a same trend for a longer period. So this is the same when market is moving up at the degree of 17, 18 or 20, 25 degree, it is moving up. It is moving up with the consolidation, and it will go up for much longer period, and then it can rise and give you much better return compared to a sharp rise. All right, so this was it was moving up in a channel. It has just breached the channel and entered into the new channel which I just formed. Let's make a copy of it and place it on the lower band of the center channel. I'm going to place it on the lower band of the center channel, and then now this is the formation. If the price will fall, will not take support at the lower band of the channel, but it will take the support at the lower band of the additional channel which is formed just below the middle channel. All right, because it has breached this channel, and then it is moving within a new force, new vibration. That vibration can be repeated and replica just below the middle channel. Hello students, today in this lecture, what the concept you are going to learn, don't take it very seriously. Let's play a game. It's like a game. This can be very useful for trading, and this can be not at all useful for the trading. Just understand what I am going to tell you. It is just based on a concept which was being recommended by W.D. Gann. What he suggested, that time is price and price is time. I am just going to work on it. This is a very base class on the concept of time and price. So it is not everything. but this is really a foundation where you will be able to understand that how the time converts into price and price converts into time. Time complements the price and price complements the time. All right, so I am not going to tell you that this is very useful. I am not going to create a hype for this. Just let's take this as a game. So let's play a game. Let's work on a mathematical formula. I'm just going to, in the Excel, what you have to do is you just write is equal to mod, then 2 bracket, then square root, then in bracket you will take the value of the price, the price where the price is trading, the value of that moment, that you will just going to change in this. Otherwise the all other input will remain the same. Only you are going to change the value of the price where it is trading at that time, or whatever the opening is, whatever the closing is, right? We will just change the input here only, right? So what it is equal to mod in 2 brackets square root, then the price of, say if it is a 20,000 is the price, then it is at what degree? That is 30.84. We are using it in a circle. If it is a circle, if the price is moving in a circle, at what degree? In one circle there are 360 degree, right? If 40,000 falls at what? 135 degree. So just 40 falls at 193.4 degree. If it is a circle from 0 to 360 degree, that circle, that value degree you will get from 0 to 360 degree. I am changing the value. 140, sometimes I'm changing again. Now 50, 500 is at 200 degree. So the price in a circle or in a spiral, better it is in a spiral of square of 9. If it is where it falls, right? So this is a formula. It is first what you have to do, from the price you have to find the degree, and that price falls on what degree, right? And what degree, that we are going to discover by this mathematical formula. So degree will fall only in from 0 to 360 degree. It cannot be more than 360 degree. It cannot be in negative. So we will get the value from 0 to 360 degree. All right. So now let's start a case study where we will be able to learn how to use this concept. Let's play the game. Let's go on the chart. This is a chart of Nifty and this is of 1 minute chart. I am going to find the reversal or vibrating point or points for that particular day. All right, what do I have to do? I have to find the opening value of the day. On this day, on 13th, the opening price is 14,600. Opening prices, I'm just going to modify the input of the opening price over here. It is 14,644. I have given the value over here. 14,644 falls on 317 degree. That falls on 317 degree. What does that mean? Convert that into time. How we can do that? There are 5 hours. 5 into 60, that is 300, and remainder is 17. So it is 5 hours and 17 minutes. What I got, the 5 hours 70 minutes, which is a very, very valuable point for me. The best I can find is like what the best I can do is, in this 17 I can use another formula to get another vibrating point. I can make 2 possibilities, 2 vibrating possibility. What I am going to do, I am just going to divide 17 with 100. I am going to divide 17 with 100 and then multiply by 60. When we count in a minutes, that is a round of 60, and when we otherwise we count, that is a round of 100. So 5 hours 17 minutes is my first choice is 5 hours and 17 minutes, and second choice is 5 hours 10 minutes. The possibility is after the opening of the market, the possibility is market can reverse after 5 hours 70 minutes or 5 hours 10 minutes. So these are the two possibilities. So our market opens at what time? Our markets here in Nifty opens at 9 a.m. So you can have an argument that it opens at 9:15, but it starts vibrating at 9. You can the pre-market you can give your bid. So I say the market opens at 9. Here also you can count from 9, you can count from 9:15 also, but I generally use 9 a.m. only. So if I add 9 a.m. to 9 a.m. 5 hours 10 minutes, what I got 2.10 p.m. or 14.10 p.m. and where the bottom is formed just dot on 14.10. bottom is somewhere near, but near to the bottom it was 14.10, and from there the market moved up in a big way. This concept may be very useful, this concept may be really a challenge to use, but we can try on 10 different days. In the chart of Nifty, we can try on 10 different days. Here market opens and started falling, and somewhere near to 2.10 p.m. 10 past 2 it made a bottom, and from there the market rallied like anything. There was a V-shaped recovery. You can look at the chart, the market fall and rise in a V shape. Now let's go, that was 13th of January. Now you look at 12th of January, how it has worked. Let's find out the opening price over here. What do we take? We have to just select the opening price. We can do with the closing also, closing of the previous day, but I prefer to take the opening price for that particular day. All right, let's zoom, and then we will be able to find where the 12th, the opening candle of the 12th is. This is 11th and this is the 12th. This big bar, this hammer is of this first candle is of 12th of this month, 12th of January. All right, what is the opening? Opening is 14,483. 14,483. Now let's put that value in our mathematical formula of mod. Here I am going to change. It is 14,483 and value is 197. Clearly we can identify there are the 2 hours. Now 3 hours. 3 hours means 180. 60 into 3, 180 and 17 minutes. 3 hours and 17 minutes. Excellent. Now 3 hours 17 minutes is the value. What this value, from where we have derived this value? We have derived this value from the opening price. We have converted price into the time. Excellent. We have got 3 hours and 17 minutes. So this is our first preference is 3 hours 17 minutes, and second preference will be just what we have done in the last case study. 17 divided by 100 into 60, that comes again the 10 minutes. 17 divided by 100, it's the same as we did in the last case, 10.2. So then our second alternate or second choice is 3 hours and 10 minutes. 3 hours and 10 minutes. We are going to add that to the 9 a.m. the opening time. Okay, that's what it is. 10, 11, 12. It will be 12, 10. 12:10 will be the time for reversal, or for at least it will vibrate. I am not saying there will be 100% reversal, but it will vibrate at that point of time. The probability is like that. So first choice is 12:10 and second choice is what? Okay, this is 12:8, 12:10 and From here the market was sideways at 12. It has given a breakout, and from there the market moved up in a big way. That also was a trigger point. Market was moving in a narrow range. Say this is 12th, this is the opening candle of the 12th, and price was moving in a box, in a rectangle, and from there the breakout came at 12 or 12, exactly at 12 it has given the breakout, and from there the market rallied, and our breakout time or the vibrating point or the reversal time is 12:09, and from there the market moved up sharply. Just it happened 5-10 minutes just before our time, but it has walked like there is in 1 minute chart we can take a grace of about 5-6 minutes here or there, but it has walked very well. 11th of Jan, what is the opening price? That is 14,449. Let's change, let's give this input in this mathematical formula. It's done. It is 171. 171 means 2 hours and 51 minutes. 2 hours and 51 minutes or 52 minutes. 52 minutes. 2 hours and 52 minutes, and then 2 hours 52 minutes. 52 we can do. For this is our first preference, that price will reverse from after 2 hours 52 minutes. First we can calculate 52 divided by 100, multiply by 60, then we will get the another value. Then it is 2 hours and 31 minutes. 2 hours and 31 minutes. If we add that to 9 a.m., then it would be it will be what, 11:31 or 11:52. 11:31 or 11:52. Let's find it out. Let's go on the chart and find it out. What it happened at 11:52 and 11:31, and this is the 11:52, and this is the 11:52. And from there the market rallied like a real reversal. From there the market even moved up only. Market moved up. This is the power of the Gann concept. The price is time and time is price. What he has mentioned, we have tested on 3 different days. If this would have been a guesswork, then these kind of result cannot be repeated again and again. I am not assuring you that this will happen every time. There will be, this is an intrinsic value of this concept, but there will be outside forces also which will work on it. It is not always that internal or natural cycle or natural concept will work. Natural concept will normally work, but sometimes it will behave differently. So we have tested on 3 days. Today it is 13. I worked on 13th. I worked on 12th. I have worked on 11th. We can try on the 10th also. Here, say even that another factor, that 10:31, that has also worked. From there the market tanked. From 10:52 it has moved up in a big way. Let's find out this one more day, that is of 8th of January. Don't get moved by this my mathematical calculation and start working on. You should work on only the price. I am telling you the concept of time on one basis only, that you will work only on price. Here I have given the value of 14,259. What the value I have got? 29. 29 means what? There is the possibility today that market will remain in one trend. Right? When I am near to 0 or 360 degree, there is a probability is that price can move in one direction. For one direction throughout the day. right? There can be a reversal on just in last half an hour or 1 hour, but mostly it will work. Or the second possibility is what? It will take a reversal after every half an hour, after 29 minutes or 28 minutes or 30 minutes, 1 or 2 minutes here or there. It can be after 32 minutes, it can be after even 24 minutes, but you will find the reversal after every 28. This is the first possibility. Was what? First possibility is there will be a trend today. And second possibility is what? I'm going to give you all different concepts of this, when you will be able to test this concept on all lost historical charts. Then you will be able to find what I have just mentioned to how they work nicely. All right, so first what we will do, we'll add that 28 or 29 to the 9 a.m. The first reversal point will be 9:29, or second reversal point will be at 28 into 2, 56 or so. Okay, this has taken a reversal at 952. It has made a bottom, and from there the market rallied. I just as mentioned, there are the two possibilities. There will be a trend or there will be a reversal after every half an hour. And now what it has been, both what I have told you, both things has been proved good or hold good on this particular day. There is a hardly chance that whatever I am saying will happen on one single day. There will be a trend or there will be a sideways movement. So this has been the sideways movement for a longer period till 2:30, and from there onwards there was a trend. But yes, this 28 minutes also have worked very well. Hello students, in this case study, let's make it live. Today is 15th of January. We will try to discover the reversal or the vibrating point. Before that, we have not done for the 14th. Let's do that. 14th, the opening price for Nifty is 14,553, and that comes to 249. What does that mean? 4 hours and 9 minutes. 4 hours and 9 minutes. And 9 minute, again we can do a small calculation. 9 divided by 100 multiply by 60, that we can do, and then we will get the second option. First option is after 4 hours 9 minutes of opening, we will be able to get the vibrating point. And here on the second possible time, which will be very close to this, that will be 4 hours and 5 minutes. So we can say the reversal can take place at, or the vibrating point. It's not necessary every time it is a reversal, because that particular price is also important. If the price has started moving above that and falls below, then that will be a sell trigger. I am repeating it. If that price, whatever the price is being generated, it started moving up and fall below, will be really a trigger point for sell. All right. So let's go by that. What the time we have calculated, we'll try to. Okay. This is the time 13:04, where the market formed the bottom and started the rally. Market was falling at that particular time, before that time, and just once it reached to that level of 1:05 noon, and from there the market started moving upward. After that it was sideways only, but that bottom was not breached till the end of the market. That was the wonderful reversal again. Super duper. But I am not going to put my energy into it, because that may not work. But we have not to be biased, but we have to be alert. Once we get the trigger, just catch that. All right. Now we are into day 15. We are on day 15. Let's find out what would be the reversal point for today? And the opening is 14,597 on 15th of January today. Whatever we have done till now is like a back testing. Now we will try to forecast where the possible reversal can take place. That is 282 degrees, 282. Let's recheck because now we are going to forecast. All right, and that's 283. 283 means 240 for 4 hours, and then we will be having 43 minutes. This is our first option, 4 hours 43 minutes. Now what the next I can do is divide 43 by 100 and multiply by 60. The possible now point is 4 hours and 26 minutes. 4 hours 26 minutes. All right, so we have two options, 4 hours 26 minutes and 4 hours 43 minutes. What does that mean? If I add this to 9, it will be 10, 11, 12, 13, 1326 or 1343. All right, let's look at the chart. Let's mark it on the chart. Okay, all right, I have marked 1343 as well as 1326. Both the points I have marked for the Nifty. We'll look at after some time. Now the time is somewhere near to 9:30 only, how the Nifty will behave at that particular time. What today it has happened? It has made a double top. We should look at the price action also. It has formed a double top, and after forming the double top, it has started falling, and it has breached the bottom also. Let's see how the things will happen at 143. Now let's check at the chart of Reliance. What is the opening price for the Reliance today? Let's find out, and then we will be calculating where the possible reversal may take place or vibration will take place. It's not necessary every time it will be a reversal. That can be there can be one big candle, one vibration can also be there. Now price opening is 1960.20. 1960 is the opening price. Enter that into our mathematical formula, 1960, and the outcome is 183.90, means 3 hours and 4 minutes. 3 hours and 4 minutes, or 3 hours and, all right, if I am doing the same exercise, it will be not going to make much difference. It will be 2 minutes or 4 minutes. Otherwise also we are ready to take the grace of about 4 points, 5 points in 1 minute chart. So here what the possible outcome is, 3 hours 2 minutes or 3 hours 4 hours, very close to, both the options are very close to each other. So where the possible time is that 12 hours 3 minutes or 12 hours 2 minutes or 12 hours 4 minutes. Let's mark that and see at the noon time what will happen in the chart, or how the market or the price of Reliance will behave on that particular time. Okay, I have marked that time where there is a possible vibration may take place. Okay, let's take State Bank of India. This is the chart of State Bank of India, and this is the opening candle, and the opening price is 306.95. 306.95. We are just trying to forecast. It may not work, but it is basically, I want to make you understand the concept that time is price and price is time. All right, then what the possible reversal time is, that is 48.85. 48.85. Okay, this is the first possible reversal time which I have marked 9:49. 48.9 was the outcome, so I have added into 9, and 9.49 is the possible time where the reversal or vibration may take place. Wow, super duper performance of Nifty. Nifty was in a sideways movement for some times. It moved up, and then it was in a box in a very sideways narrow range, and from there this was the time 1.43
and that was the that was the top, that was the top, that was not being breached for few 4-5 minutes. It was within the box. Once the box, it came out of the box, it breached the border of the box lower side, and from there the market tanked. It has fallen from almost 14,525 to 14,386 now. 14,386 now, and it has a good support somewhere near to 14,350 or so. Let's see how that price will behave. Now let's check the Reliance. What was the outcome quickly? At 12:10 there was a big bounce. There was a spike in the price of the Reliance. It moved up. Now here the price moved above that as it breached the bottom which was being formed at 12:10. In one single candle of 1 minute, it tanked. It tanked by almost more than 12 points in just 1 minute. And after that, it has made a low of 1,920 from the 1,960. Almost 40 points were wiped out as the price moved below support level. Now look at the chart of State Bank of India. What was the outcome? That was 48.85. It means somewhere near to 49, 50 or 48 minutes. Every 48, 49 or 50 minutes there is a possibility of a vibration at least. Vibration I am saying, not exactly the reversal but vibration at least. Let's count that from this point to here. It is 49 minutes. 49 minutes or 49 bars are the same because we are on the chart of 1 minute chart. Alright, that's again we are going to extend that. Here it is again 49 bars or 49 minutes. Here it is. The market, the price of State Bank of India has made a hammer. From there the market reversed every 49 minutes. Let's mark that 1, mark 2. Wonderfully it has worked from 49 minutes to 49 minutes. Next level we can make a clean divider between the two. Now 49 minutes. Here it is, the market was almost sideways. There was not much movement. Next 49 minutes. 49 minutes, here it has made a top and that was not being breached. From there the market started falling. Here the market started falling from the top. Let's see, find out what after the 49 minutes. We can make a clean divider. It is vibrating on 49 bars or 49 minutes because these are the candles of 1 minute only. 49, here it is 49. For 4-5 minutes market was sideways after falling and again initiated the same selling pressure. Time is 2:45 and next 49 minutes. This is the point where the market is vibrating, and now what is the possibility? Market will fall or go up. Let's find out. I am going to teach you one more trick of this concept of time is price and price is time. I'm going to teach one more concept to you. Market is, for one complete circle is of 360 degree and one total time where the market is trading, that is 375 minutes. All right. So 375 is also important and 360 is also important. These two points are very important. Let's find out what I am going to tell you. 360 minus the degree, which was the outcome, 49. I have just subtracted 49 from the 360. So 360 minus 49, that comes 311. 311 means 5 hours and 11 minutes. 5 hours and 11 minutes. If I will deduct this from 375, I will get 5 hours and 26 minutes. 5 hours and 26 minutes. Alright, so then these 2 points are very important. One is 5 hours 11 minutes and second one is 5 hours and 26 minutes. There should be a reversal between these 2 points. These 2 points, what I am saying, 5 hours 11 minutes and 5 hours 26 minutes. I'm just going to make it bold so that you will be able to look at it. Alright, let's go on the chart and find out the outcome. 5 hours 11 minutes and 5 hours 26 minutes. Let's make a block of it. Okay, I have marked these two vertical lines on 3, 11 and 2. I have marked the vertical lines and formed a block out of it, and you see just the bottom is formed within this range, and the possibility is till the market, end of the market, this bottom should not be breached. If this will be breached, then there will be a drastic fall. But the first probability is that bottom is being formed, that should hold for the day, and from there the market will keep moving up. This is a new concept. I have given now you the two vibrating points. First was just the degree. Now the second is 360 minus the degree or 375 minus the degree. You will get the second option out of it. Alright, with this, good luck, goodbye, happy trading and happy investing to all my students.
Let's start talking about the economics. If we talk about the economics, I cannot start without the name of John Maynard Keynes. British economist John Maynard Keynes believed that governments could change economic performance of its industries by adjusting tax rate and government spendings. This is the first key point I am telling you. It is that governments can control the economic performance of its industries by adjusting tax rates and government spendings, which we have witnessed in year 2008. All right, and here also this time on April 29, 20, the Federal Reserve has pumped 2.3 trillion. I am repeating, it's 2.3 trillion, where the Indian economy is somewhere near to it. The US central government's Fed reserves have pumped 2.3 trillion US dollar into the economy in the past 6 weeks, a massive amount of sport that went out the door far more rapidly than the most of the aid from the Congress and the White House. And you have seen the result. From 18,000, Dow has now zoomed to 26,000 in less than 3 months after the government sport of about 3 trillion US dollar, and then they have promised that they can pump in more money if it is required. Again, I am repeating Keynes. That's a key. What he has talked about. He talked about the recession only. He talked about the feelings of the humans. He said if the economy will take few years to come out of the recession, in meantime, how much the pain and individual or households will suffer. That is a really key point. Government who is taking taxes from the households or the industries, that those governments should support at that particular time when there is a pain with the households as well as the economy or the industry. Let's move the next concept of Keynes. What he used to say, how the economies grow. He says when the expenses are more than the savings. Very, very valid point I am telling you. When the expenses are more than the savings, will set more employment, increase in income and demand. What do you say? Why, how, and in what circumstances I will spend more than my earnings, more than my savings. I will be spending more and saving less only in the time of certainty. When there is a certainty, I have a fixed job. There is no threat to the economy. I will be not kicked out of my organization. If I am running my business, so that will keep generating the profit in time to come. Certainty. When there will be certainty, then only I will spend more. Remind it what he is saying. Expenses are more than the savings. Will set more employment, increase in income, and the demand will set higher growth in economy and a higher inflation. He's saying, if you want to push the economy, let the households and the industry get the confidence that tomorrow is safe. It may not be, but consumers' confidence, industrious confidence should be maintained and should be high for the growth of any economy. What in net it is? We spend more than our income only. Now, instead of saving, I have written the income. We spend more than our income only when we are certain of future income from our jobs or the businesses. Certainty is the key. Certainty is the key. Are you getting what I want to communicate to you? What are the key points how an economy can grow? Now I'm going to make a point on certainty also. Take an example of US election of 2016. At that time was uncertainty who will win, Mr. Trump or Miss Clinton. Stock market, all the stock markets, not only of the US, the whole world were nervous. I was asked, now onwards markets are up or down? My answer was, after the results, markets are up only. For one simple reason, now there will be clarity. No doubt, no uncertainty. Who will be the president of United States of America? Whoever comes, there will be a certainty. And from there, the markets will move up only. Markets or humans don't like uncertainty. When there is a clarity of the policies, it may be right or wrong, but whenever there is a clarity, then that is the environment or ecosystem from where the growth can be triggered. There is no other way out. I am talking to you is simple economics. Forget about what you have read in your books, whatever you have listened to the top shots. I am talking you simple economics, and that is that the economy will grow only one key point, that is the certainty about the future. The more the future will uncertain, the market will be very volatile, will be in fear. Next point. When the economies are in fear, savings are more than expenses, will set less employment, decrease in income and demand, will set lower growth in economy and invite the recession. We spend less when we are worried about future income. Uncertainty is the cause. We have the money, we like to keep that money safe with us for future requirements when we are not certain about the future. Let's talk of economy. What's GDP? GDP is gross domestic product. Now, whatever we have learned, all 2-3 points about the certainty, about the expenses, about the savings I had talked about, we'll try to apply that on our GDP concept, on the growth of the GDP. GDP is what? First thing is global. You might be knowing, I'm just going to run this for you. Gross domestic product is a monetary measure of the market value of all the final goods and services produced in a period of time, often annually. GDP formula, if I take private consumption plus the gross investment plus the government investments plus the government spendings plus export minus the import. If the exports will be more, that is going to push the GDP. When the imports will be more, then it is going to dent the GDP. So what is the formula? Total consumption of the final products. Consumption of the final products of it's maybe private, it may be governments or investments by the governments or the corporate, and then export minus the import. Then in total we take out, this is the GDP of any economy or of any country's economy. All right, or then we calculate, club together, we say this is a global economy of the world. All right, so how to increase the GDP? First thing, that is the whole world, all the countries of the world are trying to increase their GDP. How it moves up, how the growth rate can be increased or pushed up. First thing is increase in population. If the population will grow, then GDP is also automatically going to grow. How it is so? If there will be more population, there will be more demand of food, milk, schools, colleges, hospitals, transport, teachers, and so many things. Whatever is being required to the humans, that all will appreciate. There will be more demand if there will be increase in the population. This is the first thing. Second thing is increase in debt and the leveraging. When talking about to you about the debt and the leveraging, I am talking you very vanilla things. Suppose we 50 people are an economy. So 50 people we are an economy. Say, and we all earn 1 lakh rupees per month. So total, how much is the earning of 50 people? That is near to 50 lakh per month. Or say it is 5 million. If it is a 5 million per month, then we can spend how much? What is the limit to spend that? That is 5 million only. But now I tell you, if any one out of those 50 borrow money for a real estate, for a bigger house or first house, borrow the money, then what it would be? Then we will be able to spend more than the 5 million. If the loan is near to say maybe 5 million, so total it would be 10 millions can be spent on that particular month. Say we borrow 4 million for the higher education abroad. So how much we can spend now? 5 plus 5 plus 4. We can spend 14 millions on that particular month. And C borrows 2 million for the world tour. Say I will come back after 6 months. And in total on that particular month, how much can be spent? 16 millions. It means what? More demand that for particular month. Now next, out of these three, next month, there are the 3 other people who will be going to take the leverage. And we are not 50 in an economy, in any economy. All right. So then if we are going to take the leverage, whatever we can spend today by borrowing, that is really going to increase the economy growth rate. Why it is so? When we will buy the real estate, more employment. Auto and the real estates are the main driver of any economy. Now for the world tour, the person will spend in hotels, on travels, on some games or some museums, right? So on the beaches or on mountains, whatever, there will be paragliding or whatever you can think of. Then there will be more spending, and there will be traveling, parties, hotel, entertainment, sports, movies, healthcare, and events, whatnot. That all club together really push the economy. If because of the COVID-19, picture halls are not there, the travel is, aviation is under threat, even hotel industry is under threat. So you think of it, whenever we are going to spend, what we have learned in first slide, we have learned that if we will spend more than our savings, even I say more than our earning, by borrowing, then we can really push economy to northward, right? So this is the second thing. Second thing is what? Then increase in leveraging. If there will be more demand, even industries will also try to invest more money. They will also like to expand their capacity. They will go from one town to another town, one city to another city, one country to another country. And they will spend on advertisements. Then the media will also be benefited out of it. So second thing is, first thing is increase in population, second thing is increase in debt or the leveraging, third thing is if a country produce the business people, where the households can trust and lend their money. I'm not talking about the Ponzi schemes where the people comes and make fraud to households. Then they get afraid to invest their or lend their money or invest into any business. Households, if they can trust, I will put my money in Microsoft, if I'll put my money in Disney, if I put my money in Reliance Industries, if I'll put my money in Facebook, if I put my money in Amazon, if I put my money in Infosys, I put my money in Eicher Motors. If the households can trust and can lend their money to the business people, and business people can multiply their money. They all households want to be rich, but they are afraid of losing the money. So if they can participate and lend their money to the startups or the big peoples, if they can invest into Google, Alphabet, Amazon, Facebook, Microsoft, Disney, or Reliance, or Infosys, HDFC Bank, etc. If they can invest into, or ABN AMRO, Bank of America, Goldman Sachs, or Crosby, Credit Suisse, they can invest into these companies where the money can be multiplied in time to come. They will have the trust and they will save their money, and their savings will be diverted to these business people, and then that is going to really push the economy to the next level. I talked about the population, I talked about the leveraging, but I am talking a very valuable trigger point, and that is if the country can have those people who can risk their time and money and can really create a huge wealth for the country, or for the globe, or they can create a huge employment for the world or the country, that is really going to benefit and can take not only to the country but to the other countries also above the bar. So these are the main 3 points. You can come out with any other idea which can really push the economy. Yes, of course, the reforms, infrastructure, these are all many other factors you can count on. Now, if I talked about the developing countries where they invest their money, real estate, gold, and bank fixed deposit. What about the stock markets? What about the financial markets? What are the bond markets? If I talk about the United States of America, 60 to 70% of their savings goes to the stock market, or into the mutual funds, through the mutual funds, or from life insurance. So in developing country, it is not the scenario. There is only 4 or 5% total savings. Out of the savings, it goes to the stock market. Everybody is afraid of it because they have suffered a lot in the past due to the Ponzi schemes. But now look at, even yesterday, when I'm recording this on 19th of June, I tell you, yesterday there were the many stocks which made a new high. Nasdaq made the new high. Reliance Industries made the new high. There are the many stocks. Amazon, etc. They are either making the double top or the new high. Where is the risk? Now I talk about few companies: Apple, Amazon, Alphabet, Microsoft, Facebook, Warren Buffett, Berkshire, JP Morgan, Exxon Mobil, Johnson & Johnson. These are the companies which they have created a huge net worth. Their market cap all together, say if I take all together, it is about 2, 3, 4, it's near to 5 trillion. It is near to 5 trillion clubbed together, the 5, 6, 7 and 9 companies of only America. There's another company, Alibaba, and Tencent and the Reliance industry, they have also outperformed and created a huge wealth for their country or the world. But say if I talked about the nine, I have taken the value of this of January 2020. I'm not sure what is the value today. It may be higher. It may be higher. I'm not saying it will be definitely lower. It may be higher. But I tell you, the 9 companies together can generate a net worth of $5 trillion US. What I'm saying is a really sense when a one organization, one enterprise, if can really create a net worth, create a huge wealth for that organization, that is really going to help the country or the countries or the world. Or they can generate a huge employment. That is also really going to solve the purpose. There will be more employment, there will be more business, there will be more demand, there will be more industries, and there will be more production, there will be more profits, and there will be more tax to the government, and government can also really help in the time of bad times, like in the recession or so. In the difficult times, the government can come out, or even the IMF or the World Bank, they can come out. We are taking a pie at the time when there is a good times. When there will be a bad times, they are going to really contribute. What the Keynes is saying, what is the philosophy or the theorem of the Keynes? I'm talking on that only. They are the Now, if I talk about the branches of economy, there are the two branches. Main branches we'll talk about more. There's a macro and the micro. When I talk about the microeconomics is by the name you can understand. Microeconomics focus on the drivers of the decision making and the ways in which individual decisions affect the overall supply and demand of the particular goods and services in an economy in turn to their prices. I am repeating, this is a study of an individual, or this is a study of a small firm, or of an individual company I'm talking about. When I'm talking about the microeconomics, I'm talking about a small or the big company. I'm talking about individuals or group of individuals. So I'm saying microeconomics focus on the drivers of the decision making and the ways in which individuals, a group of people, decisions affect the overall supply and demand of the particular goods and services in an economy in turn to their prices. I talked about when there will be a certainty in the economy about the future, they will be spent more. When there will be threat of the future, there will be uncertainty about the future, they will spend less. Now their taste also keep moving from one product to another product. So we need to study that all in macroeconomics. And microeconomics, the theory of the firm. This is add-on, is broadening the concept of individual. Here is undertaken with the how firms adopt different strategies to increase their profits. They study the behavior of the individuals, a group of people, how they behave, and how by the advertisement they can change their decisions. That is really a study of microeconomics. All right, then if I talk about the macroeconomics, the focus of the microeconomics is on the factors that influence aggregate supply and demand in an economy, such as unemployment rate, gross domestic product, inflation, saving rate, investment rate, money supply from the central banks, or money supply from one country to the another country, fiscal deficit, balance of payment, reforms, and the international policies. So these we will be talking about, all about the macroeconomics. To major influencer of the public policy in an economy are the central governments and the central banks. As a third party, we can take the state governments also. I am repeating it. Policies of the central banks as well as by the central governments plus the state governments are really going to influence to the economy. What the Keynes said, The governments can influence the economy by their policies and by their decisions. Governments and central banks, decision of the governments known collectively as fiscal policy and action of the central banks known collectively as monetary policy, as a monetary policies. John Maynard Keynes laid great emphasis on macroeconomics analysis. Let's take few examples to understand the impact in next lesson, and we will continue our study. We'll have talked about the theory. Now we will look at few the case studies where we can, if these are being applied, and what the outcome or what the result or what the changes in the economy took place. All right, with this I wind up this session, and then I will continue with the same theory with the case studies in next lesson. Hello students, today is 27th of November. This is the first swing, second swing and the third swing. We have to select the swing which is not less than 15 points and not more than 36 points, or maximum you can go to 38 points, right? So this swing we have selected the top and the bottom of the swing, 13,024 and 12,990. If the price will drop below 12,990, I will short, and when the price will move above 13,025, I will buy. Stop loss to buying position will be 12,990 minus 10 points, means 12,980. And stop loss to your sell position will be 13,024 plus 10. 13,034 will be the stop loss. You will give 10 points grace for the stop loss. Now what would be the target? Target will be the 1:2, double of how much the risk you are taking, double of it. Your say range for the stop loss is 34, then you will mark your position at 68 points below the 12,990 and 68 points above 13,024. That will be your target. You will be playing very disciplined. You will not move by any market ups and downs. If the price will go for the stop loss, you will take the stop loss. If the price will hit the target, you will take the target. All right. From when it will reach, suppose you have taken a short position, when it will reach to 12,921, you will buy, cover your position and take a extra buy with further stop loss of 34 points. All right. So we will have the blocks. We will play in the blocks. 34 point stop loss and 38 plus 10. 34 plus 10. It means 44 point the stop loss, and your profit will be of 68 points. We'll go by that. As the price now have breached the lower band of our trend decider, that it has moved below 12,990, we will take a short position. This is our first trade, and our stop loss will be 13,024 plus 10, means 13,034 will be our stop loss. And now what would be our target? Our target will 12,929. If it will reach to 12,921, we will cover our short position and go long with a stop loss just by the gap of further downward gap of 34 points. And below that, we will take a short position. Now we are in a short position, and the price have just moved within the range again, but we have now a short position, and we'll hold our position with a stop loss of 13,034 and with a target of 12,921. Till then we will not do anything. Now if we will buy at 12,921, our stop loss will be at just below 34,000, it will be somewhere near to 12,886 minus 10 points. So our stop loss will be 12,876. That will be our stop loss. All right, so we have just, we'll check that our stop loss area is the same or not, if there is any mistake in calculation of 34 points. If I have just plotted the arrow over here, so nothing to worry about. We have a correct range. Trend deciding range is very perfect. Upper range and the lower range. In between, we have the area of profit making. It will touch 13,921, will buy again, it will come near to 12,990, will again sell. If it will come back to 12,921, will again buy. Today the probability is the market may remain the sideways. The probabilities, I'm not saying that it may happen, that is just my guesswork. All right, and we'll look at the interval of every one hour at 9:15, then 10:15, 11:15, 12:15. What it's just for that today. Okay. Oh, this time when the price moved below the 12,990, it has dropped by 30 points. It has come on 12,990. Mind it, we are on 1 minute chart. We are on 1 minute chart, and in 1 minute chart, it has given 30 points just below this. But I am a disciplined trader. I will not buy until unless it touches that 12,921. What I decided in first minute that I will go by the flow. I will not go by the trend. I will go by the flow. When the price will touch the 12,921, I will buy. Otherwise, I will hold my position. Let the stop loss happen. Otherwise, I am not going to take the profit. I am not going to take 30 points. I am committed for almost 70 points. So I will take 70 points. Otherwise, I will not cover the position. Now, the price is this. We are on 1 minute chart, as I said. Now it is further. Now my mind is saying cover it, man. It is 30 points. We can again will be able to sell if reaches to 12,990. No. I will not get moved by the market fluctuations or market ups and down movements. I will go by my system only. I am a disciplined trader. I will keep my all other knowledge in a box. I will not try to open up that box and will go by what I decided in my first minute. Now it is falling. It has made a new low at 12,953. Great. So this is down by 34 points. I'm just going to mark what will happen after every 1 hour at say 10:15 or 10:15. Oh, the price has started moving up. It has made a pressing pattern. If you all know about the candlestick, it is quite over here. It has not moved. Oh, it has moved. It has made a pressing pattern, and oh, it has engulfed the last candle. There is a probability that now it may go up. Oh God, from here it has again moved to my trigger point. And in just 2 minutes, it's had gone up by 40 points. It has gone up by 40 points. But, oh, I would have bought at that lowest point. I was getting 30-40 point. And again, I am where I sold the position. Again, the price has reached to that level. But no, I am a disciplined trader. And I will only secure my position when the price will reach to 12,921, or it will get a stop loss at 13,034. 13,024 is a trigger point, but now I have already sold the position. Will keep my stop loss at 13,034. Okay, price is again, it has retested 12,990, and there it's slowing down the movement at this stage. There is a large candle, a green candle, after a bear candle, which has engulfed completely. Now then again after that, the red candle is emerging at this point. which is indicating if we would have crossed this, then the further market could have moved up. But now it is within this range. The market may spend some minutes. Remember, this is a 1 minute chart of Nifty 50 index. So here it may spend some time. Let's see how it moves. Market moved down to 12,962 and again it is approaching 12,990. I think in this 30 points market is being stuck 12,960 and 12,990. But what we decided that we'll book our profit at 12,921 and if there will be a stop loss at 13,024 plus 10, 13,034 will take the stop loss. Although the price has, here it is a hammer. After this hammer, there is a formation of morning star as per candlestick, and the price has started moving up, but there is a hurdle at 12,990. Let's see how the price behave. Even double bottom is being formed, the hammer and then the morning star, but still there is a hurdle of 12,990. Let it be. And now we are going to it's going to be 1 hour is being almost passed, or it will be passed in next few minutes. We have 45 minutes are being passed, and now at 10:15 there will be 1 hour. It is approaching to 12,990 again, where we initiated our sell. Again price has started moving down. Then there are again some hopes about our trade that it will be closed. It will close in our favor. Let's see how the things shape up. This candle has engulfed that green candle, and now another candle is also in red. Let's see how the things shape up. But now it should breach 12,962 or 3, which has been formed in the shape of hammer earlier, just about 5-6 minutes back. Now look at that. At 10:10 the price has given the reversal, which we marked in the early minutes, and from there on 10:15 there was a big spurt. That's a big green candle. After that, it has reached again to 12,990. There was a sharp recovery from 10:10 to 10:15. Now the price has started making a higher tops. Although it's started making a higher tops, but still we will go with our system. We may be knowing many things, but still we will go by the system. At 990, it is an opportunity to sell only. So we have sold at somewhere near to 935 or 934, and then still we are holding our position. Neither the stop loss is being triggered nor the even target is being achieved. Today the market is very much in a range. There is a not much fluctuation, but all right, we'll go by it. Although it's making a top, let's see where we'll try to form a trend line. If the trend line is breached downward, then we can say again there is a confirmation of drop in the market in times to come, and we will be benefited out of it. Let's draw a trend line, or we will pick up the ray and we'll join first bottom and the second bottom. All right, this trend line is being fixed, and the price is approaching to this trend line. Price is approaching to this trend line, and what it will happen. We are on 1 minute chart of Nifty, and the price has come very close to the trend line, and it has touched the trend line. If it will drop below the trend line, then there is a probability. The next minute has started. The next candle is in formation. This candle has opened on the trend line only, and from there, let's see if it fall. All right, it's going up only. It has taken a support on the trend line, and it has started moving up. Up to what level it will go up now? We can take a trend line which will be forming a triangle. So we will pick up two tops and we'll form another trend line. Although this price is just on the trend line, it may breach. It has again fall on this trend line, may breach it. Let's see. It's moving up only. Let's draw a trend line with the price what we started with. This is our zone. This is sell below, and if we will breach the top of 13,024, we would have taken a buy position. But now from this top, I'm going to take a trend line. First highest high and second lower high. I have joined the two, and this has formed the trend line. All right, this has breached the triangle. It has breached the triangle, but this trend line is not being completed. Although it has breached the triangle. It has breached the triangle. That's great. Now let's give a clear picture of the triangle. Okay, this is the formation. This is the first time that price has fallen below this triangle. Then hopes are high that it will touch 12,921, but we cannot dictate the market. Now price has come down to 12,977, and next candle it is going to reattempt maybe that triangle. It has come closer to the triangle, and it is going to this 1 minute candle. It has touched the triangle again. It should fall from here, the probability is, but we cannot dictate the price to move accordingly. We'll go with our system. We have sold at 12,990 with a stop loss of 13,034 and target of 12,921. Price has just touched the lower line of triangle, and it is there. Today market fluctuation is, next candle has emerged. It is just on the trend line, and it has entered into the triangle again. It has entered into the triangle again. The hopes of falling further are now. Let's see how it's shape up. Market is spinning around our trigger point of 12,990 only. But we are disciplined trader. It may be boring, but we are into real trading, disciplined trading. We will not go against our rules. Okay, the price could not hold above 12,990, and it is now, price has started falling little bit, but now which was the upper band of the triangle, that is now converted into the lower band of the triangle, and the price is just falling the same. It is falling below this lower band of the new triangle, and price is slightly moving down. But there is a very restricted movement from say 9:55 or almost from 10 a.m. to till now. There is a market is in a very narrow range, and this narrow range is really boring. But patience is the name of the game. If we are a patient, then only we will be able to win in the market. We should not discourage by this sideways movement. We are a disciplined trader, and we will go by our system. We have sold just for the reason because it dropped below the 12,990, which was our trigger point. It would have gone about 13,024, would have been in a buy position. But now, as we have sold at 12,990, we will hold our position with 13,034 and with the target. Now these options of 13,000 and 12,900 is at 82, and 13,000 is at somewhere near 126. They have inched up about, there is a gain of 10 points in 13,000 put. Although the price has started moving down, let's see if the previous bottom of 12,967 is being taken or not. It has just come very close to it, but it may take a support somewhere near to this. If this will breach, then there will be a next hurdle, that 12,952 or 53. If that will be breached, then definitely our target of 12,921 will be achieved. So there is a high hopes of that we will make a killing, or we will make a profit today. All right, the price again making a formation of hammer over here, and price is at 12,968, 67. Again, we are in profit of somewhere near to 22 points. 22 points, but I'm not going to take, or you are not going to take 22 points. We have taken a position for at least minimum profit of 70 points or 68 points, just for the one reason, because our loss is somewhere near to 34 plus 44. That has come up 128, and then of 13,000 put, and that 12,900 put is at 83. It has gone up from the level of 60 to 83, and it has gone from 100 to 126. But still, we will book our profits only when it will touch 12,921. Till that, we will hold our position with the stop loss. If stop loss will be triggered, then we will book the loss even in the options also. Okay, now the price is just dropped below the lower band of triangle, which is now the lower band of the triangle. It moved up, and again it is sliding. It has just made a double top. It has made a triangle. We are at a profit of almost 40 points. My mind is saying let's book that 40 points, because there is a formation of triangle over here. The double bottom is being formed, and price not holding below the 12,953. Why don't I book this over here? And it is one lot is of 75. One lot is of 75. Then in total, I am going to gain about 3,000 rupees. So that is going. I will enjoy my lunch at 5-star hotel. But now look at what the options are. Options were at 120 or 526 only, and the price has dropped 40 points, but it has not moved up. This is also indicating that there is a power is with the bulls. From here, the market can move up, because that 12,900 option was available at 83. Now it is 83 only. It was 82, 83 only, 80, 81 only. So price has dropped by further 40 points, and it's not moved up. This is an indication. This is of 3rd of December. That may be the reason that they are the lock weekends of 3 days. So why the time is also gone. These may be the two reasons where that's indicating that from here it was 127, and now even it is at 127 in spite of falling off further 40 points. What does that mean? That there is a strength in the market, and price may further move up. There's the 40 points. Should I book the profit over here? No, I am a disciplined trader. I will book my profit at the target only, or I will let the stop loss triggered. Whatever, either it will be the stop loss or the target. I am a patient, I am a disciplined trader, and I will wait till the time that it reaches to either my target or to the stop loss. Otherwise, I will not do anything. Although the recommendation is here that price may further move up, and there can be a big upward movement from here. Oh, price has started moving up also. This was a formation of hammer. Although the body and the wick size is wick size is not the double of the hammer, but still the price has moved above the hammer, and that is indicating that the price may move up. But I will go with my system. I will go by my system and will wait. Now it is going to be the 11:15. That also I need to be watch what will happen on 11:15. When it was 10:15, just five candles before that, there was a bottom was being formed and the price sharped up. There was a sharp up from 10:10 to 10:15. There was a sharp up. Now what it happens now from 11:10 to 11:15? It is not in every day. It will be at the interval of 1 hour. There will be some bottom or top will be formed. It is for the today only. All right, so that again at 10:15 that price has started moving up the way it was at 10:15. The same is being repeated, and the price is at 12,955. I have just plotted a regression trend standard deviation 2 on 1 minute chart. We are trading on Nifty 50 1 minute chart. Here there was a opening. This was the opening candle. Second candle was a good hammer. From there the market started upward journey. Let's see the candlestick on it, and the price started moving up. It has made a top. Then there was a inside bar which was in the shape of hanging man, and from there the market tanked of slide. And after that, after few candles, after 5 minutes, there was a one candle which was in the shape of hammer. From there the market started moving up. That was the double bottom. Let's zoom it out and then we can see in a more appropriate manner. All right, so okay, here we are. This was the first candle. Second candle, the hammer. The price moved up in a big way. After that, there was a inside bar from where the market tanked, and then it has formed a double bottom with a shape of hammer. From there the market moved up, and then there was a inside bar from where it tanked. It has taken a sport. There was a inside bar. It taken a sport somewhere near to the double bottom, triple bottom. This was again a shape of hammer. It although breached, which gave us the first sell signal, but it was a hammer. From there the market moved up, and then there was a inverted hammer, or it was a shape of evening star. One bull candle, then there was a spinning top, and then a bear candle. From there the market started moving up. This was a evening star, and it has given a good downward movement, and price slide from 13,015 to 12,950. There was a drop of almost 60 points. From there the market engulfed the bear candle and moved up in a 2 minute. It was up from 12,950 to 12,995. And then again the inside bar was being formed, and from there the market started moving down. There was a shape of hammer. The bottom of the hammer was not breached, and from there the market started moving up. This was a dozy. It was just within the range of the hammer only, and from there the market, next candle was the bullish candle. The bottom of the hammer is maintained, bear candle, dozy star, and then there the upward movement. After that the engulfing by the bear candle, and price dropped, and it is a formation of a rounding bottom. A rounding bottom is being formed over here. Let's highlight this rounding bottom. This is a rounding bottom, and from there the market moved up equal to the distance of the rounding bottom. Let's do. We are learning some candlestick patterns in the last arc. Okay, we'll pick up this and plot over here. And this is the rounding bottom, and once the price was breached, after that it moved up. Even this triangle is also being breached. It was an inverted hammer, and then from there the market moved down. Inverted hammer, and then price moved down, and here then it was a clean engulfing, or or the rail track formation. From there the market moved up inside bar and then price moved down, then there was a hammer, and from the market moved up, and yes, after this hammer the market moved up, and then there was again engulfing and the prices started moving down. And then at last, once the again there was a hammer, again there was a inverted hammer, and again this is a hammer just at the lower band of this regression trend, and the market started moving up, taken a resistance at the this trend line low, and then hammer, and again started moving up at the upper band of the regression trend. It has taken a resistance. It was an engulfing or rail track formation. After that the price dropped, then inside bar the price again moved up, then again there is a inside bar and there is a resistance of the upper band of the regression trend, and market slide. It has taken a one or two times at the trend line. It has taken a support. This hammer is being failed, and after that there was a big drop, and it dropped is it has made a almost a new low, and from there onwards it started moving up. This hammer has given a uptrend, and there inside bar and price slided. This was a pin bar. This is even a stronger than the hammer, this pin bar formation. After that the market moved up again inside bar and price started sliding, and then there is a inverted hammer and price has come down. We are at the day low. We are at this point. We are at the day low. 12,946 is the lowest low of the day, and we are at some profit of 45 points right now. My mind is still saying, let's book the profit. No one knows from here. Then even the price will start moving up. Then it can be a big move. But no, I am a disciplined trader. I will hold my position till 12,921. Once it is being reached, I will book the profit. Otherwise, I am ready for the stop loss at 13,034. And the price has taken, because it's if I will extend this the regression trend, we are at the bottom of the lower band of the regression trend, and it is just spinning around it. If it will move to the upper band within few minutes. We are on 1 minute chart only. All right, so it is just moving on it. It is taking a support over here just on the lower band of the regression trend. The best idea is to book profit over here, but no, we are patient trader. Oh, it has started moving up from here. What we were just guessing that it can move up, and it has started moving up. It is a formation of morning star. It is a formation of morning star. Oh my God! It has just again moved up in a big way. One candle. Oh, 12,960. 12,978. By all profits are being gone. 12,976. Oh, it is approaching to 12,990. In one bar, it has just moved from 12,946 to 12,976. 30 points. This one minute candle is of 30 points. Oh, and then again it is moving. It is coming. It's just retracing. It may retrace to the upper band of the, it has crossed the upper band of the regression trend upper band also, and it is just going to second the regression, it's going, it may take the support at the regression trend upper band, regression trend upper band. It has just come to the upper band. Let's see how it moves now. Oh, one candle, one big candle. It has it made a formation of, oh, this about 30 plus points candle, and then there was a formation of morning star, and from there the price started moving up. All right, it's coming down. It's had come down to 12,946. So again, and the third candle has emerged, and it is also a green candle by now. Let's extend this Let's move it. Let's extend this bar. Let's extend this. Oh, look at it. It has just retraced to the upper band of the regression trend. It has to come within this band, then we are safe. Otherwise the price can now move up only. At least it can cover 30-40 more points to upward. That's a guesswork, but yes, I'm not going to scare my trade. Let it be the stop loss or let it be the profit booking at my chain. Oh my god, this at the lower band it has taken a sport. All the three, there is not even a single time it has closed. In the 4 times, not even a single time it has closed below the lower band of the regression trend. Always it has taken a sport, but this time it has taken a 3 times. It has taken a resistance also on the upper band. This is the first time it has breached, and then it has approached and touched, retested the upper band of the regression trend, and it is moving. Oh, price has taken a sport over here and then moved up to 12,990, which is a trend decider where I have taken a short position, and then my profit, it was somewhere near to 50 points or 45 points. That's all gone, but still my position is open. Neither the stop loss has been triggered or nor I have taken a profit. And it from 12,990, it is started falling. It has come down to 12,979, and price is again moving down. Let's hope this time it's not going to cross 12,990, and then it touches the target of 12,921, but price has again stopped somewhere here at 12,979, 78 it is, and again it is 12,980. It is spinning around just below the level of 12,990. Let's see what it will happen. I am a disciplined trader. I will go by my trading system in the and price here has taken the sport and zoom to our stop loss level. Here it has taken a resistance at 12,990, and it has made a high of 13,031. Our stop loss was 13,034. Our stop loss is being saved by just 2 points. Our stop loss is being saved by just 2 points. It could be the stop loss, but it is being saved. Our stop loss was 13,034, and from there within 5-10 minutes it has just come back to 12,990. Now again jumped few points and then again dropped to 12,950. We were again at the profit of about 40 points. Price moved up. Now again it is trading at 12,990. Neither there is a stop loss nor there is a, our stop loss is being saved by just 2 points, just 1.5 point, and it has not even triggered the target. It has not hit the target, and it is just spinning around 12,990 now, 12,990 or 92, and let's see what will happen. Yes, we are just saved by 2 points. It's a really, at least we are in the game. We are not, if there would have been the stop loss, there would be a 2 stop loss at a high point, and the low could not breach the high of double top, and now it has come down and made a formation of triple bottom. Triple bottom is being formed. The middle bottom is little lower than the first and the third bottom. Here we were at the trigger point. We sold at 12,990, saved by 2 points from the stop loss. We got 2-3 opportunities to take a cover our position at 40-45 points, but we are a disciplined trader. I am a disciplined trader. I am a patient trader. From 12,990, it has come down to 12,960. It has not breached this bottom, which was just formed just before this. And let's hope once this bottom is being breached. And here it comes the moment. Here it comes the moment. and price is going to touch 12,921. Be ready, cover as it touches the 12,921, cover your position and go long, buy extra. Don't double your position. You are in a short. If it's not going to touch 12,921. It's very close, very close. I am a disciplined trader and waiting it to touch 12,921. As it touches, cover your position and go long, go extra one. Buy. If you have sold 2 lots, buy 4 lots over here. If you have a sell position, double your buy position. If this is 0.2 double, then there is a stop loss of 12,986 minus 10 points. And even book your options also, which are just going and here it has touched. Here it has just touched. Cover your position at 12,921 and go long plus your position. It's a time to really make the killing. And now we are at a profit of almost 70 points. And now you go long, forget about it is falling further or not, it will take support on this trend line or not. Just go long, just cover your position. No greed right now. What we decided in the morning, that whenever it will touch 12,921, we'll cover our position and go long at this point. Go buy extra positions. Here it is 141 is your 13,091 is your 12,900 put. Cover your positions. That also cover your position. Sell these long puts. And now it is a formation of hammer also at the bottom. Here this is very valuable formation. I will go by this formation and take a long position over here and hold my position till 12,990. Although now time is 2:45. It's only we are left with 45 minutes, but 45 minutes are very, very valuable. It may take 1 or 2 more rounds if possible. If not, then at the closing, I will square out my position. Look at it from here, the 12,920, it has come up to 12,956. Your mind will say, book this 30 points. We will not repeat the mistake when we were in a sell position and we were getting 45 minutes, 45 points. We didn't book the profit and then it rise like anything, it shoot up like anything. But no, I will hold my position till 12,990. My mind will say book the profit at 12,957. Okay, this can be the trailing stop loss, but no, I will not do that. I will go by the system and I am a disciplined trader, and then I will book my profit at 12,900. Look, all the options here then corrected back to their positions, even lower than where we initiated the buy, and price is moving up 12,963, and it may touch the 12,990, or at least with a gap of about 12,980. At least we can take a grace of 10 points because we are in the last half an hour of trading. So we will not. Mind is saying book the profit. Look, it is correcting from 12,964. No, I will not book the profit. I will book the profit near to about within the range of 12,980 to 12,990. There only I will book the profit and will initiate another sell. I will initiate another sell over there. So I'm just holding back my position, and look, it is going up 12,967. Your mind may be wrong. What is right? That is right is the system. If it will, I will gain because of the system. If I lose, I will lose because of the system. There is, oh, look at it is gone to 975. Now mind is saying book the profit over here. No, hold it till at least 980 or 990, then we will book the profit. It's in last half an hour the action has come. Otherwise the whole day it was a very boring market. But once then you get an opportunity, that is time to strike. All right, so the price is moving up. Forget about booking at 12,975. Keep your mind aside. You will go by the system. It may fall from here. You may miss the opportunity of booking this profit. Okay, fine. But we will book the profit at 12,990 only. I am a disciplined trader. I am a patient trader. I will not book the profit over here and let the market at least go above 12,980. You may say that what is the difference between 975 and 12,975 and 12,980? There may be difference of 5 points, but it's a matter of discipline. If today I will compromise with the 5 points or 10 points or 50 points, tomorrow I will compromise with the 50 points also. So it's like a habit. It's not a system which is working for you. It is your habit. It's your way of looking to the market or way of your behavior that really decide the winning or the losing. And now it has touched 12,980. Book your profit and go short. Book your profit and go short. Sell position. You have made one killing from sell to buy and buy to sell, and again initiate a sell and hold the position till last few minutes of the market. Price may touch 12,990, but you initiate your sell position at 12,980 and you book your profit at 12,980 and short sell at 12,980. Don't get greedy for 10 points. That's very much within the range. This is the high is made at 12,982 and it is going up again if you, and here it is moving up. No, again it has missed to cross 12,982. Our position, we initiated a sell at 12,980. Just 10 points below the our trigger point of 12,990, and price is at 12,978. And we have now the sell position, and we will hold our position at 325 or 27 or 28. The time at that time we will cover our position and we'll close our day trading position. We are doing the day trading only, right? The whole day we could not get an opportunity to book the profit, but in the last 45 minutes there was a one round downward, another round up, and it had touched 12,000. No, it has just made a high of 12,982 only. It is just struggling somewhere near 12,977. Okay, in last 45 minutes we got one round and two rounds about of 70 points, 140 points gain in inactive or sideways market. The market there was a no trend, and even then we could manage to book almost 68 and 58, almost 130 points, more than 130 points in one day without having even a single stop loss. But there could be a stop loss. We cannot dictate the market. If that was, it has crossed 82, it is approaching to 12,990, which is the main hurdle, main trigger point or main trend decider. So it has reached to somewhere 12,988, and again it has stopped over there and just dropped back to 12,982. We have the sell position at 12,980, and let's see what it will happen in next. It's just 3 p.m. Only half an hour is being left. Let's see what will happen in next 15 minutes. The market is now in a big movement. Market moved from 12,990 to 12,917 or so, and then again it shoot up to 12,988, and now it is trading at 12,981. Let's see what will happen in next half an hour. We have patiently waited for this moment the whole day, and in the last leg or last hour or last 45 minutes we have got an opportunity. Look, all the options are being corrected. That 13,000 is trading, 13,000 put is trading at 109 or so, and we booked the profit above 140. Now it is at 12,976. It has started falling. It has started falling. Let's hope if we get another round of 70 points or no. But whatever the gains or loss will be, we will book the profit at or the loss at 325 or 327.28, just 2-3 minutes before the closing, if our stop loss or the target is not hit. Till now we have pocketed about the profit of 130 points. It's just we have got this profit because of our patience and the discipline. If we will not maintain the patience or the discipline, I don't think we will be able to gain in our market. Let's see what will happen at 3:15. Again, we are just making a count after every 1 hour. There at 1:15 also there was a reversal of few points, and then there was a reversal of few points from 2:15 also, and here we triggered the buy, and again we have triggered the sell, and the price had dropped to 12,968. Now we are in profit again by about 15 points. 15 points, but we will hold our position till 325 or 328 in the last minute. Just 2-3 minutes before the closing, we will close our position, and the price has come down to 12,965. Oh, it's a worth waiting. It's a worth waiting. 12,964. It is falling, and then it is going to breach the previous bottom of somewhere near to 12,953. It has reached to 12,961. It was a V-shaped recovery when it's dropped to 12,921. First time when it hit our target. From there, the pullback was very strong. Within only about 10-12 minutes, it has just reached to the level of 12,988. From there, it has started doing falling. It has come to and the price has come down to 12,939. It has breached all previous bottoms. Only the lowest low is not yet been tested, and that option price has not just gone up. It is at 1,119 just because there are the 3 days holiday long weekend, and it has come to 12,990, and the time is 3:27. Book your profit and get out of this trade, and another almost 50 points, and now we are at a profit of 180 points today. Book your profit and close your deal before that market is being closed. We are just left with 2 minutes. Close your trade over here at 12,930 or 28, wherever you get. Book your profit and close your trade. And it was a really interesting session. I enjoyed this. I hope you would also have enjoyed this session. Lots of love and the blessings to all my students.